Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, October 28th, 8:46 a.m. Eastern Standard Time, and we are here once again to discuss the global capital equity markets and open up this market. This is going to be a very interesting Monday morning for a variety of reasons. Number one, you guys have probably heard this stat yesterday, or if you saw my Twitter, but October 28th is the best performing day on average since 1950. For the S&P 500. On average, it's up about 0.5%. S&P 500 right now in the pre-markets is up 0.55%. So if the trend continues, we might end up having a good day with the S&P going up 0.55%. Pretty much everything in the pre-markets outside of a few names are green. And when I mean green, I mean very green. So we've got a pretty green market this morning as we are 7 days until the election, which is going to be a very, very big event that's going to affect the entire market. So we'll be analyzing and seeing what happens today, as it's one of the best days since 1950 on average for the market. On top of that, we got Palantir. That is up in the pre-markets. Palantir ended last week at 44.86. Currently, Palantir Technologies, ticker symbol PLTR, which will be tattooed on me one day. We'll see what happens. 45.33 in the pre-markets, up 1.05%. Again, last night on the Sunday Futures Show, we saw Palantir on the overnight markets on Robinhood being at 45.50. And although there were only 20,000 shares of volume, for some reason, Robinhood overnight markets actually does, at least with Palantir, because I've observed it very closely, correlate with the pre-market open. And look at this. We're at 45.33, new 52-week high, blasting through $45 in the pre-markets. We'll see if this holds as the market opens. I think given it's a relatively green day, you got everything going up, then this has a chance to hold and potentially even go higher. But 45.33 is what we're looking at right now, up 1.06% on Palantir. So that's big news that's happening this morning. You got Bitcoin trying to make its way all the way up to 69,000. You had Boeing that is doing an $18.9 billion offering. Yeah, their stock is definitely down right now. Boeing down about 1.85%. And then you've got the biggest news that I think we should start off with to get into the show. And then we'll keep going further from there. That I woke up this morning, I saw this. It was the first thing I saw, and I literally was just like, oh my goodness. These mother effers don't stop. They do not stop. And that is, ladies and gentlemen, Robinhood is getting into the election betting market. This is what I saw when I wake up in the morning. Introducing the presidential election market. Robinhood will begin rolling out presidential election event contracts on October 28th today through Robinhood derivatives. There's a lot to talk about on this one. We got a lot to get into. The stock right now is up about 3% in the pre-markets. Again, the speed of innovation is just insane. It's astronomically fast. So we're going to talk about that. We'll talk about Palantir. We'll get into the macro, and then we'll get into all the stuff that we have to get into as well. All right. Thank you, everybody. Thank you for being here. I'm Beneficial, Martin, Blake, Defin, Joe Hall, Joseph, Irwin. Thank you guys for being here. Also, thank you for everybody for the happy birthday wishes. It's my first day, or my second day, I guess, being 27 years old. So I'm officially into those late 20s and very happy to be here with everyone else today. So thank you all for the birthday wishes. Thank you, everybody, for being here. I'm Beneficial, Jeremy, Adam, what's up? Greg, Swaggy, Marie, Mila, Iceman, Jay, Katie, Martin, Dylan. Thank you, everybody, again, for being here this morning. All right, so let's get into it. Now, real quick, for those that are asking why I'm not using Legend, again, I already told you guys, but I guess I'll have to keep saying it because a lot of people are new here. But Legend is not appropriate for streaming. It's just that simple. I've been using it personally, not a lot, because again, just came back from India, really just like not getting into the swing of things. And hopefully this week, woke up early today, we'll get back into my routine. But it's just not conducive for streaming, dude. Like I'm looking at it right now. If I tried, like you see these tickers on the side of the screen right now on the right-hand side of the screen, you can't see those because they're so small and they're not in boxes. And there's these quirky UI things that are just not appropriate for streaming. Eventually, I think they'll get there, and I'm going to give them a lot of feedback. But it would just be sore on your eyes if I tried to show you the actual platform itself in terms of like looking at a bunch of stocks. So eventually we'll be using it, but right now it's just like not built for prime time, which is okay. That's why it's not fully rolled out yet. I think they're doing a lot of updates on it, and eventually, hopefully, we'll be able to get to use it live on the show. All right, let's talk about Robinhood. It is time to talk about Robinhood. First, let me play this quick CNBC clip of the announcement, and then I want to get into my analysis.
Just out from Robinhood, the trading platform launching derivative contracts that allow users to bet on the outcomes of elections. So it's now moved to Robinhood 2. This includes next week's presidential race. The new investment product will begin rolling out to a limited number of users. It starts literally at 8 a.m. today. So if you're a Robinhood customer and you want to bet on the election, you can potentially begin to do that if you're part of the group. Customers must be U.S. citizens. They must apply and then meet certain criteria to be approved for a derivatives account. Robinhood is using I think it's called IBKRS, but I don't know how to, if there's do you say Ibacruz? Not sure. Forecast X for those event contracts. So I don't know. Now the betting game has begun in a whole different way, because once you're on Robinhood, it's a next level kind of situation.
Just in terms of trying to lure you in with the...
Well, yeah, just it's a different generation of people who are doing this. It's a whole different kind of game.
Okay, so that's the boomer take on it. Let me give you the actual take on it. I saw a couple comments this morning on Twitter of people be like, this is like weird betting on a brokerage. I think all these people are wrong, as they've continued to be wrong about Robinhood. The new generation wants to be able to bet. It's just that simple. Whether you call that degenerate or not, there is a marketplace for that, and there is a marketplace for that has been validated. How has it been validated? Because the number one app in the App Store for finance, which is Cash App, which is the undisputed throne of the finance sector. I mean, even Robinhood, PayPal, they can never dethrone Cash App. There's just something about Cash App that gets millions and millions of downloads a day. Kalshi, the CEO of the company whose CEO I had last week onto the show on Thursday on the Market Open, look at that. Number one in finance. Number freaking one. They overtook Cash App. So when I see something like this, well, that tells me from a marketplace perspective as an investor, because again, we're unemotional about this. We want to invest in things that are trends that are going to get more people incorporated into it, that can ultimately produce compounding revenues, is that there is a sentiment, and maybe it's just a sentiment for the election right now. But and when the election is done, then the sentiment will die off, which actually is okay in my opinion. I'll explain why. But there's a sentiment right now in the zeitgeist around people wanting to take a bet on a political candidate. There's always been a sentiment around stocks. There's always been a sentiment around crypto, definitely in the past decade. There's always been a sentiment on sports betting going back hundreds and hundreds of years. And now with FanDuel and DraftKings and sports betting, that's becoming a lot bigger. Now there is a sentiment to bet on your political candidate as if they were a horse in a race. And that's okay, because that marketplace seems to be a better methodology, theoretically, not fully, but theoretically, than polling. And B, it's just a new way for people to engage in the sport that is politics, the massive amount of media coverage that politics gets. You know, usually people pick sides. It's almost like you're a sports team. And then you get to put money behind your candidate if you're that confident, and you get to see what the results turn out to be. The reason Kalshi is so important, the reason I wanted that guy to be on the show last week, is because they're not just making a marketplace out of elections. They're making a marketplace out of anything. You could bet on, is Taylor Swift going to win a Grammy this year? You could bet on how many cyber cabs or how many cyber trucks will Tesla deliver next year. Like, there's all these different ways you can bet on things. And at the end of the day, that's what the stock market is. Now, obviously, you're betting on stocks, but if you could take that same model, this is kind of what the blockchain folks talk about as well from a tokenization perspective, and you can, for a lack of a better word, tokenize different events that exist in the world that have massive attention, Super Bowl, World Cup, etc., or pop culture, and then create a market around them where there's a bid and an ask, then that's a very big business. That is a very big business. For all the people that are saying this is degeneracy, what's really funny about this is Charles Schwab himself invested personally in Kalshi. So if Charles Schwab is the platform that's not for degenerates, and therefore, you know, it's like the most safe brokerage or whatever, which it is, it's a great brokerage, but if the founder himself is investing in a marketplace for the future, because even he knows that the kids of the future are not just going to want to buy index funds and hold them, then obviously there's a massive market. So what does this mean for Robinhood? I think this means that Robinhood is going for something bigger. I do not think Robinhood gives a shit about Trump versus Harris. I think this is, and that's why they're unveiling this a week before the election. Like, they're probably, from my understanding, they're barely going to make any money off this thing because there's 7 days until the election, right? So I don't think this is a moneymaker for them. I think what they're doing right here is trying to test, do our users want a marketplace for anything? Because if they do, they've already got the users. They've already got the brand recognition. They've already got the speed of innovation. They've already got the amazing engineers and the talent. All they have to do is build out the product. And what's funny about this is on the Robinhood Legend live event, 30 minutes before we went live, I was live with Arnie, and he said, Amit, what are you expecting from this event? Do you think it'll be anything like we haven't expected? And I said, hey, maybe they introduce a platform where you can actually invest on things outside of the stock market. And my analysis was maybe it's sports betting, maybe it's like startup secondary shares you can buy and sell. But I felt like there would be something more. And then the event happened, and it was a good event, but there wasn't that one more thing that really blew your socks off. And I think it's because they were holding off until this. I had a feeling they were working on something like this. It feels like such a big opportunity that obviously Robinhood, which is a platform for a lot of the people that care about this type of stuff, would be able to unveil. So my analysis here is very simple. I don't think the Robinhood at all cares about the election. I think they care about getting some free R&D by seeing, will people actually engage in this product? Robinhood right here, 2782 in the pre-markets. And if they do engage, and if Robinhood sees volumes that are better than what they expected for the betting market, then I think eventually, probably not anytime soon, but maybe end of 2025 when they really perfect it, they could unveil a competitor to Kalshi, Polymarket, etc. And that doesn't mean the death of Kalshi or Polymarket. I mean, all these platforms, I think there's a very, very big market for all of them to survive, just like there's multiple sports betting platforms. But if Robinhood already has the users and already has the most important thing, which is users with funded accounts, meaning their money is there and ready to get spent, then yeah, I think that's why, you're going to see some more momentum from a product like that could be launched in 2025. I mean, the Hood Summit next year could literally be launching a betting market across anything. And when with Robinhood, the UI, the user experience, they just find a way to make it really good. And I think that could be big. Now, what this uniquely means for investors is that Robinhood is charging like 2 cents to 99 cents per contract. I imagine they're taking a small commission out of that. The Kalshi CEO told me on Thursday that, I mean, he kind of said, if you could read between the lines, he basically said, we're making a fuck ton of money. Right? Because the idea is you have so many bets and they take a small commission out of each bet. They are making so much money, they can afford to pay people interest on their cash inside of the Kalshi account because they just can take the interest they're getting from their cash that they've raised and pass it on to users just to keep them engaged because they're getting so many commissions. So I think it's a big business model in addition with index options and futures trading. All of these are based on commissions. And if Robinhood makes them, some perks for being a gold member to access this betting market, that's another $5 a month. There's a lot of ways they can incorporate this to be really, really cool. So yeah, I think this is exciting. Kalshi is not a publicly traded company. Maybe one day. They're a startup right now. And they're growing like crazy. So shout out to Kalshi. I mean, getting number one on the App Store in finance is not easy. But who knows? Maybe one day they'll be public. But as of now, Robinhood is a public company, and it makes sense that they're innovating. Again, and here's the thing, dude. The speed of innovation is just beyond imagination. They just had a product event. Now they're having an investor day. Now they release this new product for betting markets. They have the March 20th gold event where they introduced a bunch of products. I know people haven't got their gold credit card yet, but that's more a question of them being safe with the underwriting because they don't want to just give everyone the card and then you get too many defaults and delinquencies. So the speed of innovation by these guys is astronomical. They have earnings on Wednesday. I think earnings are going to be, now with this announcement, strong just based on the numbers alone, but the qualitative level of feedback they're getting from users and how that's being reflected in terms of the growth trajectory for the company seems pretty massive. And so it'll be an interesting week to see kind of how this all plays out. But betting markets are officially live for Robinhood. I'll let you guys know if I get access to them. I tried this morning and I have no access yet, so maybe they're rolling it out throughout the day. But I would love to kind of see what the UI looks like, how it feels, and if it has the Robinhood appeal to it, then I definitely think this is something they're going to be rolling out to other betting markets over the long term as well. There you go. That's what we got for Robinhood. Okay, let's talk Palantir. So Robinhood put out some new interesting updates today, which was good. Palantir has no updates. However, Palantir is still up. Why is Palantir still up? Well, I think the market is continuously getting excited about the long-term prospects of AI and Palantir. And that the market is getting excited about this stuff. By the way, Google's up 2%. Why is Google up 2%? Does anyone know why Google's up? I'll try to figure that out in a second. Google's up 2%. But the market's excited about Palantir going up 1.2%, blasting through 45 when something happens on Friday that doesn't even affect the stock. Now, some of you guys know this because you were on my future show yesterday. A lot of you guys probably don't know this yet. But our boy Karp sold 1.7 million shares on Friday. And the most amazing thing about him buying 1.7 million shares or selling 1.7 million shares is the stock still went up on Friday. He sold it about an average of 43.50 and the stock's going up today. Now, look, that doesn't mean that the stock is going to go up forever just because Karp sold. But my point is the fact that Karp could sell $75 million of stock after selling almost $400 million of stock a couple weeks ago, after Peter Thiel sold close to $1 billion of stock 3 weeks ago as well, It's just the liquidity that exists on this name is gigantic. And I think it takes a little bit of humbling for everyone who thinks that, Palantir is the most overvalued company in the world, which, look, it is expensive. I get it. But if Carp can offload these many shares, there are people willing to buy those shares. Now, are those people retail investors that are going to be holding back? Maybe. Are those people also fund managers that are thinking they really lost the track of the Palantir story? They really missed out. They just didn't listen to what people were talking about. They didn't understand what AIP was going to do. They didn't watch any of the AIP conferences. Then they see Carp on CNBC on Friday or Thursday, and they see him talking in one of the most interesting, eclectic, exciting ways. And they're like, man, how do I not own a piece of this overall growth story, even if I am overpaying a little bit? And that's actually what I think happened on Friday. I think Palantir went up 3% on Friday because people saw that CNBC clip from Carp and they were like, there's no reason I should not be part of this name, even if I'm overpaying for this name. And the way to kind of quantify this as well is I showed a chart last night on the Sunday show where Nvidia was trading at a 64 PE in 2021 when it was $15. Nvidia's PE right now at $140, 64. The same premium you could have paid in 2021 at 15 is the same premium you're paying right now, although the stock is 10x. What does that tell you? That tells you that stocks can be expensive but not overvalued. Because at 15, I think all of us can objectively agree, Nvidia was undervalued, right? At $15, obviously, given it's 150 right now, 140, it was undervalued, but it was expensive at the time. So it's like, I saw this chart over the weekend and I was like, this is exactly what I feel like I've been saying around Palantir. Now, that doesn't mean Palantir is going to 10x from here, but what that, or at least in the same time frame that Nvidia has in the past 3 years. But what that does mean is that it could be expensive for some time and have some pullbacks here and there, but that does not mean that it has to be the most egregiously overvalued company in the world, as some people are saying. So I think that's what we got. Solo says, but Nvidia was growing at 100%, dog. Do you think Palantir is going to grow at 100%? So this is the existential question, and this is where I welcome all the pushback, and I'm a lot of times the one giving the pushback, which is if Palantir is not growing at those Nvidia levels, then because they're not growing at these levels, they might not be able to justify the multiples. 1,000% agreed. The question then becomes, what is the bright line for growth that Palantir needs to be put up? Is it 25%, 30%, 35%, 40%? Like, on November 4th, we're going to figure out what growth they put up and what the street's reaction to it is. Because if they put up 35% growth and the street's like 50, then all right, this is a reaccelerating growth story that's going to be expensive for a very long time, but it doesn't matter because the street loves the story. And if they think AI is a multi-trillion-dollar story, Palantir being at a $100 billion market cap is enough for them to be like, we don't really care because it's still undervalued in regards to how big it can get, which is kind of what I think is going to happen. I think Palantir is going to put up good growth and the street's going to be like, let's do. But the way I get humbled is Palantir puts up 30% growth, or let's say 35% growth, street's like down 20%. Because street's like, hey, this is not enough to justify 40 times price of sales. You guys need to be doing 70, 80%. I mean, there's a world where Wall Street right now is drinking the Palantir Kool-Aid and they're like, oh, these guys are going to grow 70%, right? And then Palantir, which I think is not growing 70%, is going to, hopefully grow 30%, is going to put up 30%. And the street's going to be like, wait a second, we were buying this at 35 times price of sales because we thought they were going to grow 70%. Now, I don't know how widespread that expectation is in the broader market, especially because the earnings revisions haven't changed. The market still expects $703 million of earnings, which is only 25% growth. I think Palantir is going to crush that, get closer to 750. But if that is a widespread expectation, then yeah, the stock's going to take a little bit of a hit. So we'll see kind of how that plays out. But overall, Carp selling 1.7 million shares, not enough to take down Palantir. And in the pre-market, still up right here, up about 1.16%, blasting through 45 and continuing to gain momentum. And now we have earnings on November 4th, and that will be the big day that kind of predicts where the trajectory of growth looks like. On Semiconductor had earnings today. We're not listening to the earnings call, but they crushed earnings as well. They're up 4% right now. They were one of the bigger companies. Not too many companies have earnings today. Tomorrow is going to be wild. We got SoFi, PayPal. We got so much stuff going on, and we'll talk about SoFi in a second. But On Semiconductors did have earnings today. Let me pull up their numbers real quick. And that's why they're up 4%. On Semiconductor beat on EPS by 99. So by 2 cents, 99 cents versus 97 cents. And revenue was 1.76 billion versus 1.75 billion. Another double beat. And that's why they're doing well right now. TMDX, I believe, is after hours. Correct. I believe that's after hours. Maddie Gersh, thank you for becoming a channel member. Really appreciate it. Thank you, Maddie Gersh, for becoming a channel member. Let's talk some Tesla. Let's talk some TSLA. Pre-markets 270, baby. It hit 276 in the pre-markets. Wow. So Tesla blasted through that 270 level at one point. Last night overnight in trading, I think it was at 271 or 272. Look, the trend looks bullish for Tesla. At the end of the day, we talked about Tesla last week, and they had a phenomenal earnings, crushed expectations. If you bought it at 213, congratulations. I mean, I don't know if you expected 270, but you're at 270. And from some of the chartists I've talked to over the weekend, it does feel like 300 is on the table if you get rate cuts, which is bullish for Tesla. They have this new 0% APY, or not APY. So that brokerage head. It's an APR for the car, which, by the way, I did go to the Tesla dealership over the weekend, and it very much feels like I'm getting this Model Y. It's going to be a $500 monthly payment for me, which for a Tesla is relatively cheap. I think it's the cheapest I'm probably going to be able to get it without having to buy FSD. And that feels kind of exciting. Here's the clip of me being in the Tesla over the weekend. All I can say is I fell in love, dude. I was able to move the air conditioning with my finger. My finger controlled the flow of air. I was like, what am I? This is a spaceship.
All right, guys, good morning. Happy Saturday. I'm at the Tesla dealership. I just got 30 minutes to do a drive in the Model Y. I just took my foot off the pedal and we stopped, which is very different for me as someone who has been driving an ICE vehicle for a long time. So I'm going to take this around for the next 30 minutes, see what it feels like. And if it's a cool experience, which is already a pretty cool experience, everything's controlled through the screen, maybe we're getting a Tesla. There we go. All right.
It was pretty exciting, dude. It was pretty exciting. I'm getting $15,000 for my Honda Civic, which I don't know how the hell I'm getting $15,000 for a 5-year-old car, but I am in the trade-in. And so I'm using that money, put that as down payment, getting $9,500 of credits in New Jersey. One of the reasons I have an urgency to buy it right now is because if Trump gets elected, which we'll talk about Trump in a bit, but I don't know, dude. He's talking about getting rid of the EV tax credit. Maybe he doesn't, maybe he does. But if he does, that's gone. It'll just make the Tesla more expensive. And then I don't really care about the Model Y refresh. I know people are saying wait for the refresh. It's like, I don't want to pay extra for a refresh. And I don't really think the refresh is going to be so much more fantastic that it requires waiting this long. So 0% APR, $500 a month, 15,000 down. It feels like the time to upgrade. And, you know, I've had the Civic for 5 years. It'll be 6 years in 2025. At this point, I feel like it's time to move on to another car and, you know, get something that has more technology than just connecting Bluetooth inside of the car. So as Michael says, once you go EV, you don't go back. Dude, when I had to drive back home on my regular car and like I had to like press 2 pedals, it was just like, it was not the same, dude. It's so noisy, dude. When you turn on an ICE vehicle, it's so noisy. It's like when I turned on the Tesla, it was just like, it was peaceful. It was silent. And I was like, oh my God. It was one of the first times I experienced why Tesla investors are so damn confident. I mean, like after you drive this car, you want to buy the stock. However, the valuation over the past couple of years has been a little tough, right? So even though you've been excited about Tesla, you might have bought the car and thought, okay, the stock's going to go to the moon. And then it's just like, well, $800 billion market cap, how much more can it go? However, I feel like the reason people hold on to their Tesla, especially if they're Tesla owners, is because they're just like, oh my God, screw the street's wrong, right? And I think everyone who lived through the downtrend in 2023 and then for the most part of 2024, if you actually owned a Tesla, you were like, no, the street's stupid. The street's wrong. This is the best car in the world. And when it has FSD, yada, 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 it will continuously be the best experience ever. And I think that's why Tesla holders continue to hold and they're rewarded for holding because constantly the street ends up being wrong because they're misreading what it feels like to actually use a Tesla. And I felt that for the first time this weekend, which was very, very exciting. Shout out to Derek Wall again for the 50 gifted. I appreciate that, Mr. Wall. You don't have to do that. He gave another 50 gifted last night. I think he gave 100 gifted last night. Appreciate you, Derek. Thank you for this. It was funny. I called Derek over the weekend and I was like, dude, I just tried a Tesla. And he was like, is this the first time you've ever been in a Tesla? And I'm like, realistically, yes. This is the first, like I've been in an Uber for Teslas before, but realistically, this is the first time I tried a Tesla. And he was just laughing because like he's, you know, owned Tesla since 2010. He knows so much about Tesla, but it was an incredible experience, dude. It was just incredible. So yeah, I think I'm getting a Tesla Model Y. In terms of the actual stock, 270 feels like a run up to 300 in a melt up scenario is very possible. And the earnings growth that they did was the most important thing to justify this momentum. Remember, like a lot of this Tesla growth we're seeing right now is not just because people are excited about Tesla. It's because the numbers they put up, their operating income margins are up 323 basis points quarter over quarter. That is not easy to do. The cost of goods for their car, all of their cars, all the models on average, 31,500 is the lowest in Tesla's history. You talk about operational efficiency and excellence. It's just incredible. You know, after I went to the Tesla store, you know that 60 Minutes interview that Elon did in 2018 where he's taking the reporter around the factory? I watched it a while ago and this weekend I watched it again. And I was just in awe of like how they actually build the cars, how their supply chains are constructed. Like the fact that they built a tent in California when the Model 3 had so much demand, but they needed to ramp up production. Like, I just fell in love with the Tesla story all over again after experiencing that car. And now I understand why, people are so passionate as shareholders. So very exciting stuff for Tesla. Tesla leads me into this macro chart that I want to show you guys because Tesla beat on EPS, slight miss on revenue, and Bank of America put out this chart this morning. This is, in Q3, the most positive reaction to beats so far. So the one-day post-reporting performance versus the S&P 500 on EPS and sales surprise is the highest it's been since 2018's fourth quarter. I mean, that's incredible, dude. That is absolutely incredible. That means that if you are beating on both, you are going up on average, if I'm reading this chart correctly, about 3%, 2.5%. And if you are having an average beat, then you are going up about 1.5%. If you're missing on both, you're going down about 5.5%. And if you have average misses, you're going down about 2%. What that means is that even if you're missing on your earnings, your rate of decline is not that bad, especially if you're missing slightly on your earnings, meaning you miss kind of on revenue, but not on EPS, which is what Tesla did. A lot of companies are beating on EPS, showing how operationally efficient they are to increase net income and earnings per share, even if they're missing slightly on revenues, which I think the street is able to digest. And if you're beating on both, which we got Google, Amazon, Meta, Apple this week, all four of those guys, if they could give us a double beat on all four of their EPSs and revenues, stock market's going to reward them on average about 3%, which for those companies is big. So very, very excited to see what's happening this earnings cycle. And it looks like these companies are not slowing down. And so far, Q3 earnings, 80% of the companies that have reported have been positive. Tesla right here at 270. And if that continues over the next 2 weeks, where we have a big, big week this week for earnings and next week, and then we have NVIDIA, then, we're going to have a Q3 cycle that is pretty, pretty strong. Robinhood, 27.95 in the pre-markets, up 3.28%. Not bad at all. Again, the election betting market that they introduced this morning, if you are just joining, was a very, very big deal. And it looks like the street is reacting to how big of a marketplace that could become for Robinhood. We got MicroStrategy up 4%. Bitcoin, there you go, 68,980. Looks like it wants to crack 69,000. Bitcoin is only 7% away from all-time highs. So it's getting up there, and it looks like MicroStrategy, the miners, might be front-running Bitcoin's move. If Bitcoin ends up having its move, then we might see a 74,000 Bitcoin coming up pretty soon, which would be exciting. Josh, thank you for the $2 super chat. Bullish on my robot wife, Tesla. Well, that's the other thing. Humanoid robotics, again, is a call option on Tesla that I think eventually will be factored into the valuation model over the next 4 years. But even buying Tesla just for that thesis, which is kind of like my core thesis, I think you can't go wrong with that over the long term. Like, the humanoid robotics market is going to be gigantic. It is just going to be massive. I did an interview with CERN Basher on my channel a couple months ago. You guys can just look up CERN Emit and you'll find it. And he breaks it down for 60 minutes, just the unit economics on this business and how big it can get. Labor shortage, again, $80 trillion of GDP. It's a big, big, big market. And looks like Tesla's going to be able to attack that as well. Palantir right here, 45.43 in the pre-markets, up 1.25% right now. So we got some momentum as well on Palantir. Amit, how can I access the presidential market? So you've got to check your Robinhood app and update it, see if they rolled it out to you. I think they're rolling it out in bits over the next few hours, but it's not fully out yet. And so I don't even have access to it. But when I do have access, I will show you guys what it looks like. Okay, why is Google up 2%? Let's talk about that. What's going on with Googs? By the way, do you own Google? Put it in the chat. I think Google is going to be the largest outperformer on earnings this week. That is my prediction. I could definitely be wrong, but I think Google is deeply undervalued. And I think the only reason it's down is because of Perplexity and, the DOJ stuff, all that stuff. I don't think those threats are going to go away anytime soon, which is why I'm not long Google. However, I do think that when the algos see the numbers and they look at Google's valuation, they're going to be like, okay, do we not own Google? And you're going to see a 5% bump. That's my prediction on Google. I think it's hard to get it to go 5% down unless they really suck on their search monopoly, their search like advertising numbers. I don't know if they're going to hold that 5%, but I do think that's one of the things that could happen with Google. It's also been in a channel for like almost 3 months now. So I think you will get some momentum. I'm not seeing why Google is up 2%. I'm not seeing any press releases, no news. It's just people saying it's gapping up on a technical level. So it seems like that's why Google is getting some momentum. This is the chart that says Google should be looking to go much higher, which if you look at this chart, yeah, it looks like a pretty healthy chart for Google as well. June has been holding Google up for a couple of years. Elizabeth owns 695 shares of Google. Scott's been buying Google for the past 6 months. Sol's been buying Google like crazy. Look, I think there are risks to the thesis, but it's 21 times forward PE. That's stupid. It's stupid. If you're Apple's 35 PE at 0 growth, Google's at 15% growth, 21 PE. Like, it makes no sense. But it's a question on, if Perplexity is really taking their lunch. Again, if I was Sundar on the earnings call, I would be like really coming with the right energy to try to get people to feel that Google's not going anywhere. Right now, the narrative is all these AI search engines outside of the DOJ stuff are going to take Google's lunch. And I think Google has to come out and be like, guys, we're freaking Google. Like, no one's taking our lunch. Like, we're Google. We've been around forever. We're not going anywhere. Like, we know everything about everyone. Our AI is just going to be better than everyone else's. And we're going to be able to make that work. Now, look, I'm not that convinced on that argument alone because I am personally not using Google as much. And so, like, as a user, I'm seeing the divergence between my actions and like the investment thesis. However, Sundar needs to get people, like, is Palantir really worth 45 times price to sales? No. But when you listen to Karp on CNBC, you kind of feel like it is. And so Sundar has to make you feel like Google's not going anywhere. And I don't know if on this call he's going to be able to do that. But if he does, I think Google goes higher. I think it goes higher. Is Bitcoin 69? Oh my. Is Bitcoin 69? Where's BTC? We got the market open in 3 minutes. Bitcoin, yeah, 68. It hit 69 for a second. 68,994. It looks like it wants to crack 69. So where's IBIT, the BlackRock ETF? $39.29. Wow, that's up 3.3% in the pre-market. So if you've got a ton of IBIT, you are doing well this morning in terms of the BlackRock ETF. By the way, BlackRock's been the only consistent ETF that's been buying a crap ton of Bitcoin every single day. I mean, I don't think they've had a single day of outflows in like months. So the other ETFs can have outflows, but BlackRock ends up eating a lot of that demand. So this seems to be the go-to market for Bitcoin ETF exposure. I can't wait till they have options, dude. I would love to sell puts and calls on Bitcoin via the Bitcoin ETF. Like, that would be super cool. And I think it maybe would be a little bit less volatile than doing it on MicroStrategy, even though the premiums wouldn't be as amazing, but that's okay because MicroStrategy's volatility is for a different type of human being. Like, I've had some volatility this year. You've got to be a different type of person to deal with the MicroStrategy volatility. But I think that's just going to create more money for the broader Bitcoin ecosystem if we get options on those ETFs, which is going to be important. Did I say 3 minutes into the market open? Sorry, I'm at 13 minutes. So we got 13. Now we have 12 minutes until the market opens. What are your expectations for Shopify earnings? I think Shopify is going to crush. Shopify stock is actually not doing well year to date. Shopify is year to date up 7%. So underperforming the broader index. And UPS had a great earnings. And UPS to me is a proxy for Shopify because they're shipping out a lot of the products that are being bought on Shopify. So if they're increasing their guidance and they're having record quarters, then I would imagine Shopify is going to get momentum. On top of that, Shopify's guidance will probably go higher as well because Q4, right? You got Black Friday, Cyber Monday, you've got all that stuff that's like the most important for Shopify. And every year they somehow grow 20% year over year against their previous numbers on Black Friday, Cyber Monday, which are always explosive. So I think they're just going to continue to get some more momentum and we can potentially see it go higher. All right, so that's what we got right now in the broader markets around Shopify, Palantir, Robinhood. Let's talk a little bit about SoFi. So quickly on SoFi, I think it's up a little bit in the pre-markets right now. I think SoFi is going to do good, dude. I think SoFi, they have earnings tomorrow. It's going to be a really important one. I'll be live streaming it. I'll probably be live at 7:30-ish Eastern Standard Time, maybe 7:45. But I think the results come out at exactly at 7:30, so maybe like 7:40 we'll be live. And we'll take a look at what's happening with them. 11.20 right now, up about 2%. I think Noto, same thing with Sundar. He's got to make the shorts upset. The shorts are still short about how many shares? 180 million shares. Those shorts have to chill out, and they get chilled out only if Noto really drops the hammer. So, I think something around 670 million of revenue, probably close to 700,000 members, and 5 cents of GAAP EPS. You get that, and SoFi should hold the 11s and maybe break through the 12s. It's just going to be a question of will the shorts cover tomorrow? And I think the shorts are not going to cover tomorrow. They're going to wait a couple days because SoFi always tends to fall after its earnings. But if it doesn't fall dramatically, then I think the shorts are just like, all right, there's no reason for us to be short the stock. So we'll kind of see what ends up happening with SoFi. Do you have any thoughts on Instacart, dude? I haven't looked at Instacart in what feels like years, bro. Instacart 44.54. These guys IPO'd at $30, right? I have not looked at this stock in a long time. Do you guys use Instacart on a daily basis? because I don't use this product. Instacart, wow, it's up 85% year to date. All right, so this is a sleeper. See, but this is what it means by a stock picker's market, right? Like this was a year where you did not have to bet on the index. You could have, and the index, well, has been good, but you've got Robinhood up 120% this year. You got Rocket Lab up like 80, 90%. You got freaking Palantir up 150%. SoFi is now starting to get green. Like so many different names have been getting momentum, and that's been based on, them individually outperforming. And so Instacart up 85%. Reddit, I think, is a sleeper this year. They have earnings as well. Reddit stock. This one I totally got wrong. I thought Reddit would be bad. Reddit year to date up 60%. I didn't look at the valuation enough on Reddit. Reddit's valuation was stupid when they IPO'd. And their moat actually is decent. It's not a horrible moat. So Reddit and Instacart, two of the darling Silicon Valley companies that IPO'd last year, not doing too bad. Not doing too bad at all. Cruise lines. Okay, so hold on. We didn't even talk about oil. So Chris's comment reminds me that I need to give you guys some updates on oil. Take a look at frickin' oil, folks. Down 6%. First of all, we got to give a shout out to Matt Money. I don't know if he's in the chat, but Matt Money, who works in the oil industry, he called this at like $78 a barrel. He's like, I'm selling all my oil. I'm done. And he kind of saw this supply-demand bifurcation happening, and he got out of it. Basically, he felt there was way too much supply for the demand that was coming up, and he was right. And he got oil down about 6.24% right now. Why does that matter? Well, that matters for a couple industries. That matters for the cruise lines, as Chris says, because input costs of fuel are one of the highest costs on a cruise. Carnival up 3.4% right now. Why? Because oil is down. And so when you got oil coming down, you got the input costs coming down, which is obviously a very good thing for the cruise lines. Royal Caribbean, are they up right now? Royal Caribbean, RCL, they are up 2.5%. And then you got Norwegian, that should also be up. Norwegian's up 4%. Yeah, so all the cruise lines are up. On top of that, I think the airline should be up. JetBlue is up 2%. United Airlines is up 2%. Delta is up 2%. Okay, so all the airlines and all the cruise stocks are going up because one of the biggest costs they have is fuel. So that's, if you're kind of playing a cyclical trade there, that is a tailwind for you. Another thing that's important, and this is why the broader market might be up right now, is because, again, we've talked about this a lot, but oil costs indirectly or directly are associated with every single business in the United States of America. And when oil comes down, there is a way for either their vendors, their supply chains, et cetera, to lower their costs, which ends up lowering the cost of goods overall for a ton of these companies. I mean, even Google has to run all these data centers, right? Facebook has hundreds of data centers across the world that they have to run. That takes fuel, and there's costs associated with that fuel. So when all of that comes down, you have an argument where a lot of these companies might be able to guide for a decent Q4 in terms of their OPEX, simply because oil prices come down as well. So I think this is actually a pretty good thing. Is this bearish for EVs? So theoretically, yes, because if the cost of oil is coming down, people, aren't that incentivized to A, upgrade to solar, which we saw with Enphase last week, or B, get a Tesla because the cost of gas is coming down. Enphase right here up a little bit in the pre-markets. However, I think that's why Tesla's doing the 0% APR. I think Tesla is, this is a promotional holiday thing, but also they're realizing, hey, if oil's coming down, we really need to give people an incentive to upgrade to an EV, and 0% APR might be the way. Remember, 2 weeks ago, Tesla said, you can only get a 0% APR on the Model Y if you buy FSD. And then when I was talking to the guy at the store, he was like, yeah, a couple of days later, they told us, like, forget about the FSD thing, because they probably saw no one was willing to spend $8,000 on FSD just to get 0% APR. And they're like, okay, let's get rid of this stupid requirement. And now it's a very attractive offer, even though oil prices are coming down. So I think that's how Tesla's kind of maintaining a competitive message, even with fuel and gas prices coming down. On top of that, I'm just looking at this right now, folks. Guess who upgraded Tesla? Guess who upgraded Tesla? Gary Black. Look at that. Mr. Gary Black has upgraded Tesla currently. And he says we're going from 270 to 300 based on my 2030 adjusted EPS of $16, a PEG ratio of 1.5x, and expected long-term EPS growth of 25%. Wall Street analysts continue to boost Tesla fiscal year 2025 earnings and price targets to reflect higher auto gross margins and delivery growth. My Tesla adjusted earnings are now fiscal year 2024 240 versus 238 on Wall Street. The average Tesla Wall Street price target is now 227. The $42 share discount between Tesla price and price target is approaching the largest discount since June 2023, suggesting further price target increases as analysts update their earnings and valuation models. So there you go. You got Mr. Gary Black, who I know is a very polarizing figure in the Tesla community, but he has upgraded Tesla. I mean, look, the Tesla hype is getting real. If Gary Black, who is very conservative on the numbers, decides that Tesla's worth $300 a share, if he's deciding that it's time to get excited about Tesla, then maybe everyone else is going to continue to get more excited about Tesla as well. Okay, cool. Let's get some updates on currently how the market is doing and what it makes sense to navigate for in regards to shorting or going long this market. And then we will open up the market in 4 minutes.
Largely because of the fiscal and monetary stimulus that's still in the system.
Okay, I thought when you said you're bullish until the bill comes due, you're bullish until the Treasury market says, forget it, we're not paying for this anymore because we need to find a way to fix the deficit.
Because we're spending money like it's going out of style. And I would say
that's great, but nobody knows when that's going to happen.
No one knows when that's going to happen. And I do think we've done a lot of work that suggests, though, that once you have one wave of inflation over 6%, we've looked historically, 24 countries over 100 years, the chances of getting another wave of inflation are about 9 and 10.
Is that because of the wage inflation
That's
spiral?
a big part of it. And I think
because as prices go up, people demand more in their paychecks.
Because in the first wave, it happens so quickly a lot of times that workers don't get, they fall behind, their purchasing power declines. I think you're seeing that with some of the union contracts, right? So this fellow, the head of the longshoremen's union, is a pretty tough character.
Yeah.
Someone had the guts, I saw him, to say, 60% over 6 years, that seems aggressive. I don't know if I'd be asking that guy too many tough questions, but he said, listen, it's really 60% over 10 years. Because you have to look at the past 4 years where we're behind.
And that makes sense, but we've made a big...
They're talking about the 10-year right now. The reason the 10-year continues to surge higher is because those inflation expectations are not going down. So that's why he's saying, hey, once you have one wave of inflation at 6%, you're likely to get another one. I think looking at the data, unless we overstimulate, which I don't think we're doing right now, it's hard to get another massive wave of inflation. But I think every analyst is trying to justify why is the 10-year continuing to go higher, even though we have cut rates. And one of the reasons is because the market does not expect inflation to necessarily go down, which is why the 10-year surges higher. Now, if the 10-year going higher is a deal breaker for you, that's fair. However, 4.2% as is competition to equities, it might not be that competitive if Q3 earnings continues to do what it does. So getting 4.2% is fine, but if stocks are compounding at reasonably above 4.2%, the competition that the 10-year brings to equities can't be that gigantic enough, I think, to get a lot of money to get out of these markets. And so that just means, the 10-year is not that big of a concern if companies are doing well. I think one of the things that's going to be really important in 2025 is a lot of the 2024 rally has been macro driven, as in we've analyzed and obsessed over the macro every single day. And I think for good reason, because we needed to be able to understand where the market was going. 2025 will have some of that obsession, but I think a lot of 2025 will be about fundamentals. Why? Because next year when Palantir has very hard comps, that because they put up good numbers in 2024, it's not going to be about interest rates. It's going to be about, can they legitimately grow into the company we want them to grow? And that's about fundamentals. Same thing with NVIDIA. It's going to be about fundamentals. It's going to be about, can they beat the numbers from last year in a way that doesn't upset the street? And interest rates, inflation is probably not going to have that big of a role unless some big event happens. So I think it's going to be a fundamentals driven rally in 2025 if there is a rally. And a lot of these companies that are putting up numbers in Q3 look like they're guiding well for Q4, which means maybe Q1 ends up being good in 2025. And this show potentially continues to roll further as the market gains momentum. All right, so we've got 30 seconds until the market opens. Let's see what we've got. All eyes on Palantir right now at 45.10 in the pre-markets, falling a little bit from that 45.75 level that it was at. As the market opens, we'll kind of see how this all plays out. We got Robinhood at $28 in the pre-markets. They introduced a new betting market for those that are here today, and that betting market will be rolling out where you can bet on the winner of the election. So a new line of revenue for Robinhood. All right, here we go. Monday, October 28th, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Palantir goes down 44.88. So this happens pretty much every time Palantir has a massive pre-market open, which is that they open really high on the pre-markets and they take a nice dip as soon as the market opens. And then about 10 minutes later, they kind of get back to green. So you're at 44.87 right now. We were chilling above 45 for the far majority of the pre-markets, and you probably had some people just take profits, and then there you go. It dropped all the way to 44.75. Now we're at 44.91. I think there's a decent shot we get back to 45, and then maybe we hold 45 as we get more people coming in. 44.97 right now on Palantir. There you go. We got to 45. 45 is there, up about 0.3%. Again, it makes sense. You're at 45 for most of the pre-markets, drops a little bit when the market opens, and then kind of gets back there. We'll get back to Palantir in a second. Carnival Cruise up 5.67%. SoFi up 0.77%. MicroStrategy up 4.8%. Robinhood up 2.55% of the day, 27.70 right now. Well, we've got Shopify up 0.63. We've got JetBlue up 1.5. Enphase up 0.26. Palantir again 44.92. Delta up 3.39% of the day. Again, oil prices going down are huge for the airlines. Where is Tesla? Tesla is 269, basically flat on the day. So you were at 276 in the pre-markets. Now you got some people taking profits as the market opens, which is fair. Again, Tesla and Palantir, people will take profits as the market opens. But if there's some buyers for those shares, then you will have continued momentum. Wow, Oak closed at $29. Look at that. Or sorry, not $29, $20. Oak closed at $20. So that's up 5% on the day. That's amazing. Again, the stock was about $6 about a month ago. Cheesecake Factory up 1.4%. Netflix up 0.26%. American Express up 0.4%. Uber up about 1%. Affirm, this is a big winner from rate cuts as well. They were up 80% last month. Now they're up 2.89% on the day. Disney 95.66. Palantir and Tesla go red. All right, so you got some people taking some profits right there. Palantir 44.74, Tesla 2.68. Carnival Cruise up 6.2%. SoFi 11.20. SoFi nicely holding that 11.20 level. That's not bad. MicroStrategy as well. New all-time high for MicroStrategy, up 4.75%. Bitcoin just below 69,000. It's trying to hold 69, but it's not really holding it that well. 68,895 right there on Bitcoin. HIMS is up 3.6%. All right, not bad. They had that FDA thing happen last week. Seems like it's not that big of a deal around their sale of bootleg Ozempic, but seems like that's okay. Up 3.5%, and they are getting momentum right now as well. Where's Hood? Hood 27.68. All right, so Hood chilling off a little bit. People are taking some profits right here in the high 27s. Again, stock is up a lot this year. You would imagine that for them to go even higher, they really need a strong catalyst. The betting markets is a very good catalyst, but I think earnings is going to be kind of what solidifies a lot of the numbers for investors. So 27.64 right here on Robinhood. Apple is up 1%. Microsoft is up 0.5%. Rocket Lab basically flat on the day, 11.19. Let's look at the Mag 7 companies. Google is surging right now before we have earnings. Google up 1.5%, Meta up 1.4%, Microsoft up 0.5%, Tesla flat on the day, Nvidia up 0.42%, and then Amazon in the 190s. Haven't seen 190 in a while for Amazon. Amazon right here up 1.25%, and Apple somehow is up another 1%, even though projections for their iPhone are slowing down. Now, another thing that's happening is Apple Intelligence is rolling out today, so I'll upgrade to Apple Intelligence, and I'll let you guys know my experience for those that have an iPhone. If you upgrade, let me know what you guys feel like. The advanced emojis, the AI emojis and AI Siri is not going to be on this update. That's going to be in December. So there'll be some updates. The most funny update that they're rolling out is like when you get a text message, Apple will like auto summarize the text message. And some of the screenshots have been pretty funny on Apple's interpretation of some of these texts. But outside of that, not too many AI features on this one, but in December, you'll see a lot more. Google getting sold off now a little bit. Google was 170 to pre-markets, now 168. Again, I think Google's going to run up into earnings, and then if they have really good results, Google surges because they're just, they've been undervalued for the past 3 months. But you're seeing a little bit of a sell-off right now on Google. Where is PayPal? PayPal 83. Look at that. I feel like PayPal is getting $1 every single day. It went from 78 to 83 over the past 5 days, which is not too bad. Is Hood giving 2% for 10,000 plus transfers, or is it just 1%? So it's 2% if you have a brokerage balance, a margin balance of 10% or more, but 1% for just general brokerage transfers. However, I don't think the promotion is running anymore. It ended yesterday. So you can still try to transfer your brokerage today and see if they give you the promotion. They might end up just giving you the promotion, but the actual official date for the promotion ended yesterday. But you can still apply. Sometimes they give them a day later, and that's fine. So yeah, you'll still get 1% if you transfer your brokerage. Why is TSM down 3%? That is a good question. Why is TSM down 3%? I don't know. Are all the semis getting a little bit hit right now? No, it's a mixed bag. Intel, SMCI, AMD, and NVIDIA are up. The rest of them are down. ASML is down. On is down. On had good earnings, but they're still down 1.4%. Micron, maybe they said something on the earnings call that was not the best. Micron's down about 0.84%. Dell down 0.66%. ARM up 1.7%. TSM 198. Let's see if there's any news on TSM. TSM chips were found in Huawei products. That I did see this morning. Correct. So this is the headline right here. TSMC halts shipments to China's SoFi over Huawei chip find. TSM has suspended shipments to China's chipmaker SoFi after discovering that the TSMC-made chip was found on Huawei's Ascend 910B AI processor. So my interpretation of this is TSMC does not want their chips to be in one of these processors, and they told China to not let them take these chips into the processor. And the Chinese company chipmaker SoFi said, we don't really care, and they put the chips in the Huawei product, which is violating a U.S. export control aimed at safeguarding national security. Is this really China's fault? I don't know. This is definitely a Chinese company's fault. One could argue the Chinese company felt a lack of remorse, given they knew the CCP would have their back if anyone ever found out, which technically might end up going back to China as it being their fault. By the way, how's China doing this morning? Let's see. But that seems like a reason for why it's down right now. FXI for China, it's up a little bit, up 0.5%. Alibaba is up about 2%. So you got China, again, that has had a good run. The run is kind of stalled out as investors are waiting for real stimulus to begin hitting, or like more stimulus than they were expected. But some of that stimulus is not fully factored in yet, but shares are still up right now today, and they have been up over the past week. Okay, Tesla just went green, 270, Palantir 4507. Look at that. Look at the left-hand side of the screen. Almost everything went green, guys. Almost everything. Robinhood went green, up 2%. PayPal's green. Hims is green. Oklow's green. Tesla 270. Palantir 4502. Enphase 84. Delta. United. By the way, United Airlines. I am so upset that I don't own United Airlines. This run this year on United stock. I mean, dude, I know an airline is not supposed to go up 80% year to date, but United Airlines is up 80% year to date. And the reason I'm upset is because I've only flown United my entire life. Like I've barely flown on the other airlines. So I actually, like, as a user, enjoy the experience of United. I know there's mixed feelings about it, but like I actually enjoy going United. It's always the cheapest prices from what I'm looking at. And it's up 90%, dude. An airline up 90%. Are you like, that's insane, bro. So it seems like their operating expenses have gone down enough for the street to feel that they're just going to start printing money. And they've always been lagging in terms of EPS growth. I was doing some research over the weekend against their competitors, but it looks like they're not going to be lagging in 2025. And that's why you got United up 90%. So again, just and this is what you want to see in a bull market, right? You don't want to just see Microsoft up 80%, which it's not up 80%. You want to see other companies. United's only a $20 billion company. 25 billion. I thought they would be much bigger for the scale that United operates at, but 25 billion is a relatively small company in the public markets. So United, you want to see that market broaden out, and it looks like that's happening for United. Where's IWM? Small caps are up about 1% on the day. That's nice to see. So you're getting small caps getting some love. Hims up 5% now. Alibaba again up 2%. Palantir 44.88, trying to get back to 45. And then Tesla has too many sellers at 270, right back to 267. It keeps getting rejected hard at 270 right now as well. They're also Palantir clients, correct? United is also a Palantir client. That is also true. So maybe Palantir is a little bit of a reason for helping out. Cool. Market cap is relative. Yeah, 100%. I mean, look, $20 billion on Palantir is ridiculously cheap because it's a tech company. $20 billion on United could be, very expensive for an airline. But just in general, my gut feeling was like $20 billion for, I mean, dude, United has 4,500 flights a day. Like they operate in, like their importance to the world is so big, but their margins suck because all airlines have crappy margins. If you read 0 to 1, that's like the first thing you learn about, which is a competitive business and what it takes to be a monopoly. And the airlines obviously do not have a monopoly. So very important company. Stock is up a lot this year, but obviously margins on airlines historically have been bad, which is why it shocked me that, an airline was able to go up 90% this year. Intel up 1.27%. Celsius at $32. American Airlines up another 4%. Meta at 577. And CleanSpark right here. Look at that. The miners getting some love, up 6% on the day. BITX 2x leverage Bitcoin fund should also be getting some love. Yup. Wow. They're up 7% on the day. So that's doing nice. Bitcoin trying to get right back to 69,000. IBIT as well, up 4%. All the Bitcoin proxies, MicroStrategy, new all-time high. This one is going higher as well. SoFi 11.17. SoFi holding that $11 level, up 1.55%. Nubank is also up today. Nubank, yeah, wow. Nubank, new all-time high on Nubank. $73 billion market cap on Nubank. 1539, up 3% on the day. DJT 4413. DJT is up 13%. Okay, so let's do a quick discussion on Trump. Trump was in Madison Square Garden yesterday, and he not only had 20,000 sold out seats, he had multiple live streams on YouTube of over 200,000 viewers. That rally last night in New York City, which is a Democratic state, might have been one of the most interesting rallies I've seen in my entire life for a Republican candidate. On top of that, I know people saw that he was on Joe Rogan this weekend. The current view count for the Joe Rogan Trump podcast is, what do we got going on Joe Rogan? We've got 33 million views. So it doesn't take a genius to kind of look at the media distribution that Trump is getting, from 33 million views on YouTube, on a podcast, to, tens of millions of downloads on Spotify's app, and then also all the overall coverage he's getting, to say, hey, maybe the markets are pricing in that Trump's going to win, and maybe the market's like that as well. DJT right here up 12% based on the idea that if Trump wins, people are just going to buy up DJT because they think that's going to go higher. SoFi right here at 11.13. So Code Johnson says 1.3 million viewers on the Newsmax live stream. Yeah, dude, like objectively, the amount of coverage he got over the weekend was massive. And now it's just a question of, was that coverage enough to sway voters and independents into his lane? Maybe, maybe not. We're going to find out on November 5th, but that is a pretty massive thing that happened over the weekend, and that's obviously affecting his numbers right now, and it's affecting DJT stock as it goes higher. Where is the S&P 500? S&P is at 581, up about 0.46%. Again, if you're just joining, October 28th, on average, the S&P goes up 0.5% over the past 70 years since 1950. So if history continues to be what it has been for the past 70 years, then we might end out the day closer to 583 on the S&P 500, as it's one of the best days ever for the broader market. Shout out to Benny. He said he's just crossing 35,000 in the portfolio for the first time ever. I love it. I know a lot of people are hitting all-time highs on their portfolio. So shout out to Benny. Shout out to everyone who's hitting a all-time high on their portfolio. Benny, where's your comment? Let me highlight the comment. Okay, I think I lost your comment, but I see it right here on my there we go. About to hit 35,000 in the portfolio for the first time ever. It's pretty incredible, dude. It's been a hell of a year for the markets, and today is obviously a very strong day as well, and it's leading to a lot of all-time highs. Now, look, the one question here, I think, to the entire chat, and I'll let you guys answer it, is, does that mean if you're hitting all-time highs in the portfolio to start trimming, or does that mean the show goes on, right? I think that's the question. And throughout 2024, if you've been hitting all-time highs, it really hasn't made sense to trim unless you phenomenally timed the July top and then August 5th bottom, which I feel like, if you did, you got to give yourself a pat on the back, because it was a hell of a thing to time the July top, like July 16th, and then get right back in on August 5th. But if you weren't able to do that, trimming at any point this year just wasn't the right strategy. And I know this because I have a lot of Robinhood, but I could have had a lot more. I mean, I had 200 call contracts I bought for 50 cents in my Roth IRA when Robinhood was $10. Robinhood is now $27, which means that 11,000 would be worth 90,000 right now. I sold at 18,000. So I made a nice $7,000, very happy for that 7,000, but I was like, oh, I need to risk mitigate in February. It would have been worth 100,000 in my Roth, bro. That is like over 10 years of Roth contributions on one trade that would have happened if I just had trusted Vlad and not been jittery before NVIDIA earnings, because I sold it before NVIDIA earnings in February, because I was like, oh, what if NVIDIA tanks? It's like, that was just, looking back on it, I know hindsight is 2020, but it was just the wrong mindset, given Robinhood's valuation and given how much freaking time I had on the contract, which was January 2025. So I could have had 10 years of Roth IRA contributions in 1 year if I had just not been too eager to trim. Now, granted, again, hindsight is 2020, but sometimes it's hard not to trim if you're hitting all-time highs. So I guess that's the question to you guys is, does that make sense to trim right now at all-time highs? Because I'm sure a lot of you are hitting all-time highs. Or does it make sense to kind of hold on, wait till rate cuts, and wait till the election is over as well? Why is TSM down 3.5%? They are down because a Chinese manufacturer put TSM chips illegally into a Huawei processor, BITX now at 33. And that is violating U.S. embargo laws. So That's not good. And that's why TSM is down right now. Is that a big deal for TSM? No. I mean, that's like, honestly, TSM just had a crazy run this year. So people are taking any reason to take profits. But it's one of those things where, legally they got to get that checked out with the CCP to make sure that doesn't continue. Robinhood 27.78 up 2.66% on the day. Maybe 28 is on the horizon for Robinhood. Palantir as well, 44.98. Palantir holding on to closing in on 45, basically at $45 right now. And now we just got to see if we can get above 45 and kind of hold on to it. I'm Beneficial says I sold all my Tesla today. Interesting. So Tesla at this 270 level, you were one of the reasons we could not get above 270, 268 right here on Tesla. That's actually a more interesting question than my first question. Is Tesla a sell or a buy right now? Let's do a poll on that. Because I think that's actually, we've seen Tesla have these runs before. In July, it came all the way back up to 270, and then it came crashing right back down to 210. So that's a better question. Tesla buy or sell at 270. What do you guys think? I'm curious to see what the poll looks like on this, what the split is here. Tesla 270. I mean, look, valuation is up there, but at 860 billion, but growth is also, it looks like if Elon's right about 20% delivery growth, I mean, I think we are headed a lot higher. If they actually, they're going to grow barely 1% delivery growth this year. 2025, that's 20 to 30%. That's a big growth change year over year for Tesla, because they haven't been growing vehicle deliveries that much for the past couple of years. Bitcoin healthily above 69,000 right here, 69,206. That's taking all the proxies a lot higher. Look at that. Getting to 70 now would be the time. I mean, we are in the depths of Q4 heading into November, which is one of the best months for Bitcoin. It looks like you're seeing a little bit of that action right here. So 69,000, not bad at all for Bitcoin as it gains some more momentum. All right, on the poll, we have 53% say buy, 46% say sell. So it's a little bit closer to 50-50. It's not as easily tilted to one side or the other. There are some people that still feel, hey, maybe Tesla at this point right here is a bit of a sell. I'm Beneficial selling out a Tesla right before I buy one. Yeah, exactly. Dude, I think I'm really close to buying this Model Y. I'm pretty decided, given that I'm getting 15 grand for my Civic, that it's a no-brainer in terms of the deal. And given the financing, owning a Tesla doesn't have to be that expensive. So I'm excited, dude. It'll be really fun to have that Model Y. And driving it around was fun, dude. Like, it was fun driving. It didn't feel like a burden. It felt fun. And then one day I won't even have to drive, because it'll drive me wherever I want, hopefully. But it was cool. And I'll let you guys know if I end up getting it. Microsoft right here, 428, AMD at 158, Apple at 233. Skechers was up 15% last week. Skechers is up another 3% today. Again, you don't see this in a bear market. You don't see Skechers start to get momentum. Skechers in the past month or in the past 6 months is still down 7%, but over the past year is up 27%. So their earnings as well show that consumers are buying. We saw Deckers as well. Deckers said the consumer is very healthy. Deckers raised their 2025 outlook. You got these consumer companies saying that the consumer continues to engage with their products. Are you buying it used or new? I'll be buying a new. Instead of used. And even buying it new with the trade-in, it's still a hell of a deal. So it seems still better than having to buy it used. iBit right here, 39.48, Bitcoin 69.235, Google 168. So Google kind of giving up all the gains that it had when it was up 2%. Rocket Lab 11.20, Riot at 10.26. Oh, TJ should be happy. TJ should be very happy. TJ owns more than 100,000 shares of Riot. So we got to wait for his screenshot on Twitter today. I think he'll have a exciting screenshot as well. That's up about 6% right here on the day. BBW is up right now. What is BBW? Build-A-Bear. Build-A-Bear, yeah. Build-A-Bear year to date is having a hell of a year. Build-A-Bear year to date is up 64%. I had a guest on the channel in January who told me about Build-A-Bear, and I think at that time it was up 30%. Now it's up 60%. Build-A-Bear, for those that don't know, is a store where you can like build a stuffed animal, and they're similar to Abercrombie, dude. These retailers that have been able to just rebuild their brand. Look at Abercrombie, up 58% year to date, and they're getting the bulk of the rotation when it comes to these small caps. which is why it's getting momentum. I hope Palantir runs to 49 this week and then drops into a big dip so we can buy more into the 30s. I don't know if we hit 49 this week, but I think 49 after earnings is possible if earnings absolutely crushes it. And I know I'm being super euphoric here, but I don't think we gap up to close to the 50s outside of a catalyst. And the only catalyst for the run to 45, by the way, quite literally was the CNBC interview. I know the L3 Harris partnership was big, but like the CNBC interview is what did it, I think, for most people. In terms of just like deciding to buy and be part of that story. So I don't think there's a catalyst until earnings, but if earnings is, a big daddy earnings, then I think a run to 50 is not crazy given where the momentum is for Palantir. And if it doesn't happen this quarter, I think in the next 2 quarters, we're headed there. So but look, here's the thing. It has been over 3 weeks. We've held $40. It has been over 3 weeks. We have held $40. We talked about normalizing 30. It took about 2 months. Now it looks like we might be on the path to normalize 40. Which is beautiful because that just means it's going to be harder for Palantir to potentially go under. Nate, thank you for the $10 super chat. Amit, thank you. Can you please look at Wolf? I am up huge in this one and want your thoughts. Please say hello to Adam Bergman and have him on soon. I was actually talking to Adam this morning, so I definitely got to get him on the show soon. But thank you for the super chat. So Wolf is very interesting. I haven't done a ton of DD on this, but this is a Bitcoin miner, but this is also a big energy play, if I'm not wrong. In fact, Stanley Druckenmiller agrees with you, Nate, because he bought a crap ton of Wolf in Q2. So Wolf year to date is up 200%. And I believe they got some very important energy contracts a month ago, which is what created this catalyst. I'll do some more DD on them. I'll talk about it with Adam and see if we can get our thoughts on this one. But yeah, this has been the best Bitcoin miner to bet on because it's not just the Bitcoin miner. It's much more than that, which is why it's been getting some momentum. And then if Bitcoin goes up, I mean, this thing could go even further higher, right? Because Bitcoin is a wild card for this. So yeah, I'll do some DD on this. This one and Archer Aviation, I want to do some more DD on. I know a lot of you guys have been hitting my DMs around Archer Aviation or just like Joby, the sort of eVTOL market. I want to do some more due diligence on these. So I'll present whatever I find over the next week because maybe, these stocks are $3, $5. Maybe they're worth a bet. They could go to 0 or they could go to $10, $20 over the next couple of years. And maybe it makes sense to at least have a little bit of the portfolio allocated to a kind of wild card bet. So I'll take a look at these over the next couple of weeks and see what happens there as well. Okay, so that's what we got on Wolf. Tesla 266, S&P 500 581, United Airlines 77. Where's DJT? You got DJT up 17% on the day at $45. Again, Truth Social, which is what DJT is a shell company of, $9 billion market cap, less than, I think, $2 million in revenue was the last reported number. It doesn't make any sense, but it's a proxy for the market thinking Trump is going to win. And that's all I'm interpreting it as. And right now, if it's up 17%, I think the market is betting that Trump has a decent shot of winning this election. Meta right here at 574, Clean Spark at 12, American Airlines 1374, Celsius at 3192. Chipotle at $60. Wow, Chipotle breaking above 60. It's been a while. It's stuck at 57, now up 2.43%. Where is McDonald's? McDonald's $2.99, up 3% on the day, kind of flat from last week. And then Starbucks, which has earnings tomorrow or on Wednesday, Starbucks 98. Starbucks really not getting hit after that preliminary earnings that they put out. Palantir right here at 44.91 on the day. Cool. So that's what we got going on right now. Drug is running again. Dude, this stock, I saw this in India when it was up 2,000%. I couldn't believe it. Drug up another 4%. I haven't even done the research. I don't even know what drug they got approved that was like so exciting for them to be up 2,000%. But it was something that people just went crazy over. This is a very, very small cap. And they got FDA approval. Look at this, dude. 2,700% year to date. The stock was $1 on October 11th. It's $51 today. And it's holding. Like, it's actually holding these levels for the past 5 days. Now, maybe it doesn't hold over the next 5 months, but like, usually these things go up and they come straight down, and it's actually kind of going higher. So I have no idea if this is FOMO or if this drug is actually going to change the world, but I wouldn't chase it right now, is all I'm trying to say. At this point, you missed the story, and it is what it is if you miss the story. So that one is getting some momentum today. Are you adding to Palantir at these levels? No, I'm not adding at these levels. Look, it's hard to add at these levels when Karp is selling a ton of shares, Peter Thiel is selling a ton of shares, and ultimately, it's trading at a price of sales and price to earnings that is pretty expensive. Again, that doesn't mean it's overvalued in my opinion. But that doesn't mean it's expensive. And I think hopefully I'll get some better opportunities. If I don't, that's okay. I mean, it is what it is. At some point, I will have to chalk up the fact that I need to buy Palantir in the 40s because, like, if I want to own this company for the next 10 years, then, and I think it's going to be $250, $40 is a good deal. I don't know if right now is the perfect time for me to feel like, this is the time to get excited about it. So it's kind of one of those things. Well, after earnings, we'll wait and see. There's a good thing about already having a position established. You kind of don't have to chase. You don't have to be super like antsy about it. And if you want to add more, you add more. If you don't want to add more, you don't add more. So what I definitely wouldn't be doing right now is selling. And I know people are taking profits. That's totally fine. Not a big deal. If you're selling covered calls, that's also totally fine. I don't think it's a big deal, especially at these levels. However, I think if you've been in this story is one of those stories you just don't get out of. This is like getting out of NVIDIA before it becomes NVIDIA. I'm not saying Palantir is going to become NVIDIA anytime soon, but if there was any company that has the potential to become something like NVIDIA in terms of stock return and in terms of just overall importance to the world economy, it's Palantir. And look, I know that sounds crazy to some people, but when NVIDIA was $15 trading at a 64 PE in 2021, no one would think that in 3 years, NVIDIA A would be still trading at a 64 PE, B be up 10x, and C have the entire world depending on their products. I know that's a big thing to say for Palantir, but if there was any freaking company in the stock market where that could happen for a company that's less than $1 trillion right now in terms of market cap, I feel like it's Palantir. And so Adam says the mid's definitely saying Palantir will be NVIDIA. Look, I feel in my heart Palantir has the level to get up to NVIDIA, but I don't want to say it because then everyone thinks I'm being super euphoric and being too excited. So I'm trying to be objective here, but in my heart of hearts, given, and I'm emotionally attached to the company, so I'll openly admit that. I've spent time at the company. I've seen the company. I've talked to the employees. I understand their culture. I just think this is a unicorn that's sitting in plain sight. And although it's an expensive unicorn, it is indeed a unicorn. And one day it will become, bigger than we can imagine. So it's one of those things where eventually I'll be buying in the 40s. Right now, I'm not doing that. But after earnings, we'll kind of see what happens and see how things play out. But again, earnings could have this sucker move to 50 and then, maybe have to normalize buying in the 50s. It really is just, like, I think this is going to be the biggest earnings ever for Palantir because there has never been an earnings where the stock has run up 150% year to date and basically 60% in the past 3 months before earnings, which means, do you guys remember on Q1 in May, Palantir went from 20 to 25? And it was a big deal. And Arnie and I were live together. We were in DC and we're like, oh my God, it's at $25. And then on earnings, it fell right back to 20. Now we went from 28 to 45 and actually 20 to 45 if you include the August 5th drop going into earnings. So we thought 20 to 25 before earnings was a big deal. And then we tanked back down to 20. Imagine what the street should feel like going from 20 to 45 before earnings. Do we tank another 20% or do we just go higher? It's all going to be based on what Q3 earnings actually looks like. You've said that every earnings minute. Yeah, but this time I mean it. This time I really mean it. And on the next earnings, I'm going to say it again and I'm going to mean it as well. But like this time it is a really big deal, bro. Going from 20 to 45 before earnings, S&P inclusion, all of this stuff happened, AIPCon, before Q3 results. And now we're going to see kind of what these Q3 results look like and what trajectory the business is going in. So it'll be a big one. I'll be live as always. It'll be a big one. And we'll see what happens. Shout out to Crossroads in the chat. 52-week highs for Hood, PayPal, Nubank, almost like FinTech isn't dead. That is 1,000% correct. A lot of people said FinTech was dead earlier this year. They just weren't that patient. And they really weren't looking at some of the innovation coming out of these FinTech companies. 52-week highs. Look at Nubank, 1534. PayPal, 83. Oh my God. No one said Robinhood 28 in the chat. No one said that. Everyone was just letting me talk and yap. No one wanted to say 28 in the chat. Look at that, baby. $28 for Mr. Robbing Hoods. 2802. It's so funny. I put in an order yesterday to buy 5 shares at $27.25. And I just put in the order because I was like, fuck it. I just want more shares of Robinhood. And I woke up this morning and I saw the order was executed and I got 5 more shares. And I also saw they had a betting market. And I was like, this is why I'm buying this sucker at 26, 27. And I just don't care if I'm buying it at 52-week highs because I just believe in the rate of innovation. And actually, Palantir has taught me a lesson on Robinhood. When Palantir was 27, 28, 29, I should have been buying more. For the amount of conviction I have, I should have been like, you know what? I don't care if it's at 52-week highs. It's in an uptrend. I should buy more. I didn't do that. I was buying, but not like I should have been buying, not like 100 shares every other day like I'm doing for Robinhood, because still I was like, all right, well, the valuation's getting up there. It's 52-week highs. It should take a breather. It did not take a breather. It failed the breathalyzer test. It went higher and higher and higher. And so I think learning a little bit of that lesson into Robinhood, if I believe in the company and I believe the momentum is there, and I'm seeing the same thing I saw with Palantir, which is momentum. Forget the valuation, forget the 52-week highs, momentum. Then momentum creates more momentum. And so it's one of those things where, you know, even at these levels, I still think it's a decent buy, especially because I also think Robinhood's valuation is just still undervalued, given they have $5 billion in cash at these levels and given they're growing 40%. So there you go. $28 for Robinhood. Not bad at all. Congrats to everybody. And nice to see it continuing this momentum. Wealth Basic, thank you for the $20 super chat. A week ago, Nadella had a conference and dropped terms like AI agents, artificial intelligence platform, digital twins, and guardrails. Do you think they developed their own ontology and caught up to Palantir? Very good question. I do not think Microsoft is building an ontology like Palantir for a couple of reasons. Number one, it's a very hard thing to build, and it takes years and years of innovation, R&D, patents, all this stuff to build that type of ontology. Number two, Microsoft has a market for AI that is fundamentally different. Palantir, I mean, Robinhood right here at 2820, different than Palantir. So Microsoft's market is selling agents, Copilot, and then Azure cloud AI workloads, and that's how they make their money. Palantir is about being an operating system for your enterprise. The amount of time Palantir spends with their partners, not their customers, as Karp calls them, their partners, to be able to build a cohesive operating system that justifies them spending $20 million a year is a lot. Microsoft doesn't do that. Microsoft's a very big company. They're not spending a crap ton of time with your company, walking you through all the baby steps. They're just like giving you the software, collecting the revenue, and moving on. So I think for Microsoft to develop something like an ontology is impossible, because the amount of time they would have to spend consulting with the clients that would adopt that ontology is too much of a cost for them, and they would not be able to engage in that. Number two, Microsoft, as you said right here, Nadella's all in on agents. I don't really know what the hell agents are going to look like for Microsoft. You got Salesforce saying that agents are basically Clippy 2.0 when Microsoft talks about them, and that they have the best version of agents. So I think that's still left to be decided. But at the end of the day, I don't think Palantir is going to be able to, or I don't think Microsoft's going to be able to want to compete with what Palantir is doing in regards to becoming the operating system. But there's obviously going to be some cross sections of competition when it comes to AI agents, because that's also what AIP is working on as well. Where is Palantir stock right here? Palantir 4507. Look at that. Palantir above 45, Robinhood above 28. Not bad at all for both companies right now. So yeah, exciting. Very, very exciting. Chris says right here, NVIDIA is not actual competition to Palantir. Yeah, anyone who says NVIDIA is competition to Palantir doesn't understand what's going on with NVIDIA. Like, yes, they have a software part of their business, but NVIDIA is not building an ontological operating system that condenses all of your business intelligence and then helps you build workflows off of that. And look, maybe NVIDIA is doing something like that with CUDA to an extent, but the amount of work Palantir has to do with a Tampa Bay General or a BP, like BP wanted them to be an exclusive partner for a decade, bro. You think anyone's going to lock up Microsoft for a decade? Microsoft's going to give them a big middle finger and be like, dude, we're a $3 trillion company. We're not going to work with you for a decade exclusively. But Palantir, which was a sub $20 billion company at the time they made that deal with BP, that was a very important deal for them to make. And that gave them a lot of trust with BP, and that allowed them to gain a reputation of actually building transformational software for their clients. So the Microsoft NVIDIA competition regards to Palantir is non-existent in my opinion. However, the complementary forces that NVIDIA provides to Palantir, aka all this GPU demand, means more LLM demand, means more actual transformational necessities for AI in the workplace demand. That's where Palantir comes in. So I think NVIDIA and Microsoft are just going to be tailwinds for Palantir versus necessarily massive competition. Palantir right here, 44.98. Where's Tesla? Are we back to 270? Tesla 269.81, trying to get back to 270. DJT up 15%. Nubank 1540, Hood 2807, PayPal 8312. Not bad at all on the day. Doug says NVIDIA is mostly building what is the equivalent of device driver layers on their hardware. Palantir doesn't care what your hardware is. Yes, and I think this is another thing the street is figuring out, that Palantir doesn't give a shit what model you use, what chip you use, what processor you use. They care about what data does your business have that needs to be ontologized to derive insights from. And newsflash, that is every single business on the planet, and every single government agency on the planet has that problem. All of them have the problem of organizing and making sense of their data to become more efficient. And that's the Palantir thesis, very simply. Now, I think that Palantir thesis will evolve as time goes on. We see things like warp speed and all these different new verticals of products they're building out. We saw the mixed reality headset. There's all these different ways they can get their fingers into different marketplaces. But at its core, businesses need to make sense of their data, and that's every single business on the planet. AI is just the tailwind on top of that core thesis that they've had about the ontology. It's essentially doing marketing for the ontology for them. And now it's just a question of if they can grow, which is why these AI boot camps are so exciting, because every single company would love to actually be hands-on with the product itself. Where's Oracle? Is Oracle getting some love? Oracle 172. Okay, so Oracle's up a lot this year, but it's down on the day. But Oracle chilling out at that 172 level. Tesla 269, still trying to teeter into that 270 range. And then Palantir going back and forth from 44.97 to 45. Volume on Palantir is 11 million. Market cap is 100.7 billion. HUT is flying. Let's take a look at the crypto proxies and see what we've got going on. Crypto, wow. MicroStrategy 250. Bitcoin's not even 69,000 yet. It was there and then it came back down. CleanSpark's up 6%. Coinbase up 5%. HUT is up 9%. Marathon's up 5%. Cypher's up 5%. Robinhood again up 3.34%. BitX up 6.72%. And then the Bitcoin mining ETF up 6.69% on the day. So you got the Bitcoin proxies definitely getting some momentum from Bitcoin. A says people don't pay enough attention to NVIDIA software like Omniverse and digital twins for simulation, manufacturing, design, and operations. I agree. Look, the Omniverse is a big deal for NVIDIA. The question is just, does NVIDIA care about being a trusted partner to thousands and thousands of organizations to help them build out their digital twins for simulating, manufacturing, designing all their operations in the same way Palantir is doing it? It's not that NVIDIA won't take some of that market. It's, do they have a forward deployed engineer that you can call up tomorrow or in 2 minutes and have them immediately be on your business operations and do what they need to do? You know, I was talking to some of the alumni at Palantir's AIPCon, and the reason Palantir gets framed as a consulting company is because the alumni were telling me they do a lot of consulting. Like that when Karp says these are our partners, not our customers, it's because they work with them so intimately, but they're selling a product that has gross margins of 80%. So although there is a lot of consulting that is happening in the business process, the margins are not consulting margins, right? Which is why there's a mismatch in terms of how analysts think of it versus how the PE is framed on Palantir. The question becomes, does NVIDIA and Microsoft care about doing that type of consulting for their clients and building those lifelong relationships? Or do they care about just selling more chips, maybe upselling some CUDA software, some Omniverse software, and then moving forward? And when you're at the scale NVIDIA and Microsoft is at, quite frankly, you can't waste time. Like, you have to be moving faster and faster and faster. And that's where it seems like Palantir has a massive opportunity to really build lifelong relationships with some of these customers. Amit, are you covering SoFi earnings tomorrow? Yes, I'll be covering SoFi earnings tomorrow. That'll be a big deal. I've got some SoFi options. By the way, let's take a look at those options. Where are they at? Up a little bit today, up 82 cents. So we got those $15, $20 calls. Look, SoFi can do well tomorrow. And if they get into that $12 range, I think those options will do well. I know a lot of people have $12 options expiring on the 25th. A lot of people bought those a year ago. So January 17th, 2025, folks, is going to be a big, big deal. January 17th, 2025, there is going to be God knows how many options contracts that are going to be coming. So I would watch out for that day. That's going to be a very important one. But a lot of people are trying to get in the money on their SoFi options, and it's close. $12 is very close. It's just a question now if the guidance can be strong. And if it is, then it's going to be exciting. Okay, cool. So that's what we got going on right now. Let's get some other updates and see what else is going on in the macro. Let's do some headlines and see what else we've got looking at. So I'll put on the chart and then I'll run through some headlines here. Robinhood falling just below 28 right here at 27.97. Palantir is at 44.91. So we do have to survive the 10:30 slam. So we got about 21 more minutes until that 10:30 slam happens. And then after that, we'll see what goes further from there. But we do have to get through the 10:30 sell-off. Okay, so we talked about the TSMC news. McDonald's is bringing back the quarter pounders next week after the E. coli outbreak is contained. Maybe that's why McDonald's is up right now, actually. Mickey D's, yeah, they're up 2% off that news. So basically, it looks like quarter pounders will be back in all U.S. locations, given the beef samples in McDonald's were tested negative for E. coli. So again, that was a irrational, not an irrational dip, but it was one of those dips where when McDonald's fell almost to $2.79, if you bought that dip off the idea that this would not be Chipotle in 2015, then you're up right now. And so, the market gave you an opportunity on McDonald's last week if you took that opportunity. JP Morgan on Apple, they said in week 7 of our Apple product availability tracker, delivery lead times across the entire iPhone 16 lineup have moderated compared to last week, with the decline being particularly notable across Pro models. While the moderation is slightly higher than the same point last year, aggregate lead times remain largely in time with those of the iPhone 15, suggesting demand remains resilient, though modestly below last year levels. Okay, so JP Morgan thinking that Apple iPhone demand will be fine. You got crude oil again down about 6%, which is big for the broader markets. Citi says buy AT&T, $24 price target they have. And Wells Fargo upgraded Spotify to $470 with an overweight. Their argument is our analysis of incremental gross margin points to further expansion beyond current consensus estimates. We believe Spotify's strategy combined with evolving industry dynamics supports continued margin improvement. Spotify also had a really good year. Spotify's up like 100% this year. Spotify right here at 383 right now, up about another 1% on the day. The CEO of Kalshi was on CNBC this morning. Yeah, I imagine Kalshi is getting a lot of attention, given that app is number 1 in finance. Dude, beating Cash App in the finance app store in the United States is not easy, and the fact that they're holding number 1 is pretty incredible. So, makes sense that they're getting some media coverage as well. Mark, thank you for the $27 super chat. Happy 27. Thanks for your insights over the years and for turning many of us into Palantir. Thank you, Mark. I really appreciate that. Thank you, everybody, again, for the birthday wishes yesterday. Really appreciated it. You know what was funny yesterday? So I was at my uncle's house because we were doing something there, and we had a little get together with the rest of my family. And one of my aunts gave me $51 for my birthday because in India you have to give like $1 for good luck, so 50 plus 1. And immediately I was thinking, what is the closest Bank of America I can get to deposit this $51 so I can put it in so I can put it into my brokerage, dude? That's how bad it's getting. I'm like, oh, I don't need $51 in my wallet. I need it to be in my Robinhood account though. And it's just like, it was so funny because I'm like, dude, I like any dollar, dude, I have like nothing in my checking accounts, like nothing. Everything goes into the market. Like I just like maybe I have like $100 or something, but I don't care about having money in my checking account. I just want my money to start either getting a 5% APY if it's not invested, or 4.5% in Robinhood, or at least like compounding into stocks versus being stuck in a checkings account. That's another reason I use my credit card so much, because I usually don't have money in my checking account. So then I use the credit card and I just pay off the credit card at the end of the month. And I get rewards from the credit card, but it's also because a lot of times I don't have money in my checking account. So I need some money to pay for stuff, and that's where credit comes in. But literally, dude, every time I get $1, I'm like, how do I get it into my brokerage account? Because it's just dying away in my wallet. There's no point of it just, sitting there. Robinhood $27.99, PayPal $83.28, HIMS $22.73, Oklo up about 16%. Wow. Oklo heading a hell of a run, $22.35 now. And you got Palantir right back at $45. Elon says Grok now has image recognition. Interesting. Okay, so do you want to test it out right now? Let me see. Let me upgrade Twitter on the App Store. Okay, it says no update, so maybe I can do it, maybe not. So Grok, you can, oh yeah, you can take a picture. Okay, so I'm going to take a picture of my screen right here, and I'm going to feed it to Grok, and I'm going to say, what do you think is going on right now? So let's do that. All right, taking a picture of the chat and the live stream. Okay. What is happening in this picture? Okay, I'll show you guys what it says. Wow, holy crap, that was quick. Holy crap, that was quick. Dude, that was in less than 1 second. Oh my goodness. In this picture, it appears that someone is conducting a live stream or online meeting focused on financial markets or display or trading. Laptop display, the laptop screen shows the trading interface with stock charts. Streaming software, the software being used appears to be StreamYard. Camera setup, a Sony camera is mounted on a tripod. Chat interface on the right side of the screen, there is a chat interface. Environment, the background shows curtains, suggesting the setup is in a home office or personal workspace. Dude, that was not a joke how quick that was. We got to try it again. What do we try it with? What do we try it with? What do we do? What can I? Okay, the cowbell. Maybe I'm just gonna take a picture of the cowbell. See what it says. Okay. It's a picture of the cowbell. That was quick, bro. I'm just gonna say, what is this picture? Let's just see how fast I can do that. All right. What is this picture? And I'm gonna press send in front of you guys. Oh, are the bricks real? That's a good question. We should do that. What is this picture? All right. So here it is. I'm gonna press send immediately. Look at that, bro. Look at that. That was less than a second. This picture shows a close-up of a small hammer. Okay, so it's not a hammer. It's a cowbell, but it thought of it as a hammer. Okay, so that's okay. It messed up on hammer versus cowbell, but the fact that it was that quick. Dude, the biggest thing I've had with Grok is that it's not quick, and ChatGPT is so much quicker. This is pretty incredible. All right, let's ask about the bricks. Okay, so we're gonna ask, are the bricks real? It's gonna lie if it says it's fake because we know the bricks are real, but are the bricks in this background real? All right, here we go. The bricks in this background do not appear to be real. So I know Elon made Grok to combat misinformation. Unfortunately, his Grok is engaging in misinformation right now because obviously it is real. So we're going to need to report this to Twitter and see if they can fix this. But look, it was able to analyze it. It gave the wrong analyzation, but it was indeed able to analyze. They look like a brick patterned wallpaper. Wallpaper. Stupid AI. Fucking dumbass AI doesn't know anything. Wallpaper. It's the dumbest thing I've ever heard of in my life. Absolutely stupid. Okay, let's go back into the markets and see what we've got going on. Let's get an update on Apple. We got some new Apple updates coming out today. Let's see what we got going on with Apple. Here we go.
Look forward to, Steve, I'm guessing you're going to say curb your enthusiasm a little bit. This is a pretty slow rollout.
Yeah, a very slow rollout. And we're expecting, of course, Steve, this Apple Intelligence to launch as soon as today, but with an extremely limited set of features and only for the newest iPhones, Macs, and iPads. And this launch is coming at a time when the street is struggling to figure out what iPhone demand looks like. If you were hoping, though, for Siri to get smarter today, you're going to be quite disappointed. Only two main features are coming: AI summaries and notifications, and a new look for Siri, but it's just as bad as it's always been. But now when you talk to Siri, the screen's going to kind of glow around your iPhone. The better AI features like ChatGPT integration, generating custom emojis, those are still several weeks away from launching. And that big Siri update and the integration with all of your apps on your phone, that's not expected until next year. But that has not stopped Apple from marketing those features to prospective iPhone 16 buyers. In fact, that's all the ads actually talk about. But if you want to summarize your emails like Bella Ramsey's doing right here, you're going to have to wait. In the meantime, we've gotten some sour commentary on iPhone 16 demand so far. Last week, the CEOs of AT&T and Verizon said iPhone demand isn't as strong as last year, and they're unsure how long it's going to take for the AI rollout to change that. Meantime, analyst Ming-Chin Kuo from TF International Securities, he said Apple cut iPhone 16 orders by 10 million units. That's a little higher than usual for this time of year. So you might be asking, why has there been such a slow rollout for Apple's AI? Well, according to Apple's software boss, Craig Federighi, he told the Wall Street Journal last week, Apple wants to, quote, get each piece right and release it when it's ready. But that hasn't stopped CEO Tim Cook from hyping Apple Intelligence. He also told the WSJ, quote, it's changed my life, guys.
It's changed his life. I mean, that's interesting. I've been playing around with a Pixel phone, which released some of these features, and it has not changed my life so far.
I don't think so. There might be a little bit of
exaggeration. For
exaggeration.
that. It's interesting, though. You mentioned Craig Federighi, who's been kind of playing down expectations, and Apple typically does take that route. They don't need to be first, but they want to do it best, and it feels far from that. So do you think we're seeing an Apple that's willing to experiment a little more these days, and is that a positive signal?
Yeah, this actually quite literally is an experiment, Deirdre. Even once all these features launch out, they're going to still be labeled as beta, meaning it's a kind of public test version that, yes, you can use it. Yes, it's going to be part of the main iOS upgrades that you get on your phone and get across your devices. But again, still beta, still going to be problems with it. And that also gives Apple a sort of excuse to say, if it screws up, they can say, well, we're still working through it. At the same time, you got to game this out. Moving forward, every device that Apple launches is going to be capable of these AI systems. And eventually that means over 1 billion people, at least on the iPhone front, are going to be accessing artificial intelligence from an iPhone. So this is a long, drawn-out rollout, but what we're really waiting for is
Coming this Thursday, we're going to have earnings, and we'll get our first indication of what iPhone demand looks like, guys.
So I agree with Ryan right here in the chat. This will get very useful in the near future. It's just not useful yet, and that's okay. But the street's going to have to price in some significant usefulness of it if they want to see the growth of it. And it'll happen soon. It's just not right now. And so I think that's the market dynamics the street's going to have to figure out. If it's not useful right now, does it still matter for us to, give Apple the premium if we think it's coming in the future, which I think they will, because it's Apple, and, Apple to 250 by the end of the year if the market melts up. I think it's very, very possible, because the street will be like, oh, the AI consumer narrative is happening and you're going to get Siri advanced in December, and then that's your tailwind. So I think it will happen. It'll just take some time. Now, the really interesting thing about this is Grok is moving, you could argue, much faster than Apple. Grok, I mean, again, feeding that picture and getting a response within milliseconds, and a pretty damn good response, just shows me that XAI is moving pretty damn quick. Now, I know Apple has their own host of challenges, and they're interacting with these models in a fundamentally different way. But in terms of speed of execution of rolling out new features, Apple's definitely slower than most of the other AI companies, definitely slower than ChatGPT, but I guess they want to get it as perfect as possible before they roll it out in December. And the thing is, even when they do roll it out, it's not going to be perfect. They're probably going to make a ton of mistakes. So it's just a question of how much better can they get it before it's available to hundreds of millions of people. Tesla 271. We are green, folks, on Tesla. 271.32 on the day, up about 1%, which is pretty incredible. Palantir still teetering on 45. Robinhood as well, 27.96. Trying to get back to 28. Palantir right here, 44.95. So all of them kind of closing in on those levels, but Tesla right here breaking 270, and hopefully we can continue to stay above 270 right here. 870 billion market cap on Tesla. I think Tesla gets to $1 trillion when it becomes, let's see. We have $130 billion left in market cap? 370, basically. No, more than 370. You have 3 billion shares outstanding. So 130 divided by 3, so $43. So 271 plus 43. So 315. 315 is where Tesla gets to $1 trillion. 315 is the number that you're looking for $3 trillion on Tesla. And that would be essentially a 16% move from here. 16% move gets you $1 trillion market cap on Tesla. It doesn't sound crazy, dude. I know 16% on Tesla is a lot, but it's not like it's like an 80% move to get there. The hard work has kind of been done, going from 130 to 270. 10 events done. Earnings were great. Now you just got to get that final push towards the end of the year. Rivian's up 5%. Wow, Tesla's taking Rivian up 5% as well. Look at that. Yeah, I mean, look, I don't really believe in Rivian anymore. Like, there's a lot of, I do think it's cheap because it's trading at cash, but after being in a Tesla, it's hard to imagine any other electric manufacturer really being able to scale like Tesla and deliver the user experience that Tesla can give. And I mean, if the EVs don't really make that much money, and all the money is going to be made on software on the EVs, which is what FSD does, is Rivian going to be able to have something like FSD that can subsidize their negative gross margins for the past 10 years that they've had on these cars? I don't know. Do they have the data advantage to get there? It's like hard to kind of see a thesis for a lot of these companies when you've experienced a Tesla and understand a little bit more about the thesis. Now, NIO maybe has a better chance because it's in China, even though Tesla China is pretty competitive, but Rivian's in the United States, and Rivian's got to really compete with Tesla. Now, granted, if they can get more money from the big guys like Volkswagen and all these guys fueling them with cash, the stock might go up just because the tangible book value goes up, which is a good trade if you get in at these levels and the stock goes higher. But the actual business, not so sure if they can meaningfully compete. Iman, thank you for the $5 super chat. Please do a review on IONQ. So that is still on my list. I'm doing some DD on this. I know a lot of you guys care about the quantum computing company that is IONQ. It's on my list. I'll be doing some research this week, and I'll hopefully presenting some DD later this week. No position in it. It's up a lot this year, and it seems like quantum computing is a tailwind that the street's betting on aggressively. Oklo's at 23. Yeah, Oklo's at 23. I got to send a text to my friend who has a shit ton of Oklo at $6. And I just got to be like, congrats, dude. This is pretty incredible. 22% on the day. Pretty amazing. Again, Oklo's pre-revenue. They're moving on nuclear energy hype, which might be very real, even if it is hype. And the street could be front running some deals they're going to get. So you got to chase it at your own at your own risk, because this thing could fall easily. It could go up easily if the nuclear energy momentum continues to go higher. One thing I will say is the chart looks incredible for Oklo, and the narrative is great. Like Google signing nuclear deals, Amazon signing nuclear deals. So if these deals don't stop, I know it's a pre-revenue company. I know it's a startup that's basically public, but we could go higher. I am not chasing it, but I could understand, it having a little bit more momentum. Why is it running today? That's a good question. I don't know. I don't see any headlines on Oklo. I'm looking at it right now. A lot of the TA people are saying it's all technical. It's a breakout right here. I feel like there has to be some catalyst for a 20% day, though. Like a 20% day requires something outside of technicals, but I don't see anything. If you guys have anything, let me know in the chat. I don't see anything for why it's going up. Hi, Mitt. What do you think about MPW? Thank you for the videos. MPW? What is this one? Medical prop? I've heard of this a lot. Oh, this is Steve likes this company. This is like a REIT for medical properties, right? Yeah, I don't know a lot about them, but I think the interesting thing about them is their dividend structure. I remember I was talking about Steve and Chris in January on this stock. Yeah, I don't know much about this one, but I'll ask Chris next time he's on and get his take on this. The dividend is 7%, and it's essentially a REIT, from my understanding, for hospitals, so medical properties. Yeah, don't know too much about them, but they do have a unique incentive structure. Also, the corporate bonds on these, I also think, are something that people like to see as well. Rivian now $11.08, up 6% on the day. Tesla $272. Palantir still trying to get to 45 at 44.98. Hood at 27.96. Hims 22.69. Coca-Cola 67.18. Where's Schwab? Is Schwab up on the Hood news? Schwab is flat on the day. Schwab 71.82. And you got Robinhood right here at 27.97. Again, the deposits for Robinhood as well going into Q4, I think, are going to be crazy, bro. There's a lot of people that brought over their Roth IRAs, brought over millions and millions of dollars. And so those deposits in Q4 could lead to a pretty strong fourth quarter outside of the third quarter as well. But it's going to be good. It's going to be good for stronger momentum. What else do we have going on right now? Did someone mention nuclear at Trump's MSG rally this weekend? No one mentioned nuclear, but I think Trump barely mentioned it. He was talking about energy. One thing that he did mention is that he wants to make interest on car payments tax deductible, which is a big deal, if the cars are made in America. So he's got a lot of these policies coming out around American manufacturing, and it looks like there's going to be some tax incentives based on that. Okay, I just got an article from my Bloomberg plug just sent me an article. Do you guys want to read it together? Oh, this is a fun one. Okay, cool. This is a cool one. So my Bloomberg plug, shout out to Charles, just sent me an article on Palantir. The title is Palantir is a rare puzzle for Wall Street's brain. It's like a 3-minute read. Let's read it. It's a 3-minute read. Let's read it together, and let's go through what they're saying right here. All right, here we go. Okay. No matter how much they torture their models, sell-side stock analysts just can't come up with a justification for Palantir Technology stock to go higher. The Peter Thiel-backed defense analytics and artificial intelligence company, known for its highly sensitive work with the Department of Defense, has surged more than 161% this year. Bloomberg News colleague Carmen Ricken said, analysts don't expect the winning streak to continue, with the average target implying a decline of more than 30% in the next 12 months, the most downside seen for any stock in the U.S. benchmark. Wow. Analysts are thinking this stock will fall 30% over the next year. So that would imply a $31 stock price on Palantir. Their caution main stems from Palantir's lofty valuation. The shares trade at more than 100 times future earnings, a hefty premium over the other AI names, some of which are also considered too pricey by investors. What's interesting about this and slightly encouraging is that the brain-breaking valuations are becoming much less common among large capitalization tech stocks. At the time of writing, Palantir is among only 17 S&P 500 index stocks trading above 5% consensus target prices compiled by Bloomberg, essentially saying a lot of the money is leaving the Mag 7 and they're betting on some of the smaller names that aren't at multi-trillion-dollar valuations. When markets are caught up in selective fevers, the number of gravity-defying stocks is typically many times higher than that. Overall, only about 68 stocks in the index are above their targets. This is actually a very good chart because that means that we're not in crazy euphoria like 2021 if only 68 names are trading above Wall Street analyst targets. In 2021, I would imagine this number would be like 300 or 400 names out of the S&P 500 that were trading above targets. So it's actually good to see that it's not that intense. Palantir could be a hard to understand juggernaut or an example of a sentiment-driven excess. Like many such companies, it's engaged in technically complex work and boasts an element of cultish fandom. Chief Executive Alex Karp is a quirky and brilliant doctor of neoclassical social philosophy with an Einsteinian proof of curly gray hair, who founded the company some 2 decades ago with entrepreneur Stephen Cohen and Thiel, the billionaire tech investor. Named after the magical Lord of the Rings stores or stones that imbued users with the ability to see beyond great distances, its tools have been used for law enforcement, counterterrorism, and high-stakes warfare. Hardcore bulls have suggested that its technology could be set for widespread private sector adoption. Is it worth $100 billion? Who knows? For his part, Karp himself surely doesn't think much of the analysts running the numbers that imply his company is overvalued. Here's how he put it last week on CNBC. We already read through this. We don't have to read this. This is when Karp was basically saying people are in Motel 6. As he alludes to, Palantir has been often perceived as overvalued relative to analyst models, and the disconnect has reached current extremes to on a few previous occasions, notably in late 2020 and early 2023. The difference is that on those occasions, it was part of a much larger pack of price target defying companies. Now it's exception on an index packed overwhelmingly with reasonably valued stocks with straightforward, discernible upsides. Basically, they're saying, hey, Palantir is now in the S&P 500, but it's trading as if it's a meme stock, given the S&P 500 benchmarks are much lower than what's happening with Palantir. 2 years and 68% into the S&P 500's rally, there are plenty of investors who become nervous that the index's gains are overdone. Clearly, at 21 times blended forward earnings, it isn't cheap. And as always, there are countless risks that could knock shares off course. Those risks include the major conflict in the South China Sea, Trump election, et cetera, AI. Equally as important, there's the possibility that the Federal Reserve won't deliver as many interest rate cuts as markets have been expecting. All right, that's it. That's the article. So we didn't get too much from that. Kind of a macro article about valuations right now, and they plugged in Palantir probably for the headline just to get people to kind of click on it and discuss Palantir's valuation compared to the broader market. But really just saying, hey, Palantir is expensive. And we kind of all know that, but not saying anything more other than Palantir is expensive and the market itself is expensive, which is fair. It's a fair point to make that, but Q3 earnings are doing what they need to do. And if Q3 earnings continue to produce the level of results we are seeing, you could see momentum continue to go higher. Tesla right here, 271. Look at NIO. NIO's up 9% off Tesla being up 1%. And you got Rivian that's up 6% as well, seemingly because Tesla right here at 271 is up on the day, which is not bad. Not bad at all. Chris says Palantir looks primed to run this week, but I could be wrong. Not financial advice. What is reliable is institutions will create chaos to separate retailers from their shares. Yeah, and look, I think we all know objectively retailers bought at 30, or not retailers, institutional investors bought at 37 and 38 bucks. So if they bought a ton of Palantir at that level, maybe they pin it back down to those levels to get more cheap shares, or maybe they don't sell as easily because they just bought, and if it does go down, they just DCA. But what is a fact is that institutions bought a lot of shares in that 37 to 39 range. And although retail probably jumped in as well, you got a healthy base of investors post S&P inclusion that did buy and that probably want to buy more if they want to go long on the broader software AI theme that we've got going on right now. Jim says, I had the same perspective as those Wall Street guys before. Finance and valuation concepts have been hammered in your brain since you went to an MBA school to writing those CFA exams. Yeah, and look, I don't think it's a bad thing to have those perspectives. It's actually very healthy to think like the Wall Street guys think. But as Josh Brown, I didn't show you guys this clip. I really want to show you guys this clip. As Josh Brown said 4 years ago, which I talked about on Twitter the other day, creativity is very important when it comes to being a tech investor. Here's a clip that I think is so important that I saw a couple of weeks ago on Josh Brown's Instagram. And it's one of those clips that I think can define what it means to be a tech investor. It's a really, really good clip around NVIDIA and Intel. It's a 2-minute clip. Let's take a look at this.
Fat, expensive hamburger you want. I'll bet if we look at 1 year from today, I'll bet you Intel's share price, and I'll happily pay if I lose, but I know I'll win. So I'll bet you Intel's share price has appreciated more than NVIDIA's share price.
Well, that was Jenny Harrington 1 year ago today with a bold bet, as you heard, that Intel would outperform NVIDIA over the next year. Let's look at the returns. It didn't happen. Jenny, Now, I'm not sure if the Polo Bar, well, the Polo Bar's not open yet. Minetta has an amazing burger. I think the 21 Club, I'm not sure if that's up, but I love that burger too. I know where Josh likes to roll usually at the Shack, but he's going to milk this one now.
Oh, not for this one.
Yeah.
Daniel Boulud is making
He
this
wants
burger.
gold on his hamburger.
Jenny, I think you deserve the first word here after the tape.
Thank you.
Talk to me.
Okay. I have 4 takeaways on this. One,
get
it's
outta here.
unwise to make an audacious. Come on.
One
It's unwise
takeaway.
to make an
I was
audacious
wrong.
bet on
It's so
national TV.
easy. Okay.
I was totally wrong. Okay, there. 2,
Good.
I will never back down on that valuation matters and that will underpin my process. 3, it's a good reminder that you don't need to be right all the time. And 4, if I liked Intel at 12 times last year with all the good things that have gone on this year, right? Like they beat earnings 3 times, they got Pat Gelsinger, they're getting into the founder business. If I liked it at 12 times last year, I should love it at 12 times this year. So Josh, double or nothing?
Oh, no.
Oh.
Spare us. We don't want to wait another year. Neither does Josh. He's hungry. He's got his hat
All
on.
right.
He's already
Whatever
thinking
burger you
about what
want,
he's
you won.
Jenny,
You won
honestly,
by a million miles.
I know.
Now, what Josh says over the next 2 minutes, it actually was one of the most insightful things I've learned from understanding technology investing.
Oh, that's the thing. It's the magnitude. Look, I don't disagree with you that valuation matters. But honestly, if it were that easy to just look at like, EBITDA to enterprise value or PE ratio, like everybody would be rich. What's required, especially in technology, maybe more so than any other sector, what's required in technology is an imagination. So there's all these guys walking around Wall Street. They're like, oh, I'm a numbers guy. Oh, that's great. Every number that you could locate, I could find too with a Google search. There's no edge.
So this part of this part, it's something I knew, but it's something you need to be reminded of. Being a numbers guy is very good. You need to know your numbers. But to invest in technology, if you know NVIDIA's numbers, everyone else knows NVIDIA's numbers. Like all the numbers are publicly available. So the numbers don't give you the edge. What gives you the edge is imagination. So with Palantir, it's like, can you imagine the ontology becoming bigger than what we all, have in terms of our expectations? And that will then dictate what the numbers look like. But the numbers alone on the PE, price of sales, cannot be the defining thesis when investing in these technology companies.
Like anybody could see that Intel is cheaper. Anybody could see that Intel is cheaper than NVIDIA on every metric. What's required is imagination, creativity. And many of the types of people who come into Wall Street don't have it. They don't have it.
But I would argue that my imagination here, I would argue my imagination here is far greater than yours. Can you imagine the stock?
That part was funny. I'm not gonna lie, that part was funny.
That's one way to look at it.
You know what?
You imagined the world in which Intel mattered in technology anymore. But what you were doing actually is investing in the rearview mirror.
You know what? To me, this story.
No, but in fairness, I wasn't.
Jenny, to me, this story is a market story. It speaks to what's hot and what's not. People are willing to pay up for growth and momentum and a sexy story rather than old and tired and having to turn a ship and.
Sexy story diminishes. Sexy story diminishes the actual Jensen Huang and the engineers at NVIDIA. Intel is making CPU chips like it's 1998, and they're not even good at it. They can't even ship things on time. NVIDIA is basically making GPUs and nonlinear processors that are going to power every industry that will matter over the next 10 years, AI, machine learning, virtual reality, augmented reality. Intel is not an important player in any of those places. So, yeah, the story's sexy, but the fundamentals are also sexy.
Well, of course.
The earnings growth is explosive. The revenue growth is off the charts.
Of course, but part of my...
So I think that was one of the biggest takeaways I got from that debate around Intel and NVIDIA is like, look, in 2020, when they made this bet, you not only had to have the imagination of what NVIDIA could be, but you particularly had to have the imagination around what GPUs could be used for. Everyone knew that CPUs versus GPUs was coming, and Josh Brown in particular, who bet big on NVIDIA, I think like 2015, saw the potential of GPUs. Now, you had to figure out that GPUs would be used to usher in a new paradigmatic way for us to think of accelerated computing. Then you had to think about what the models in terms of the transformer models, which now are referred to as LLMs, could be created for as a result of those GPUs. And then you had to have the foresight to think, okay, if these GPUs train and build these LLMs eventually will do something like potentially replacing Google because of how amazing they're going to be in our day-to-day lives, to the point that Apple wants to incorporate ChatGPT and Gemini into their literal new iPhones as their biggest selling point. If you had all of that imagination, and you probably didn't imagine that tit for tat exactly how it was, but if you had some resemblance of what those GPUs could turn into in terms of drug discovery and manufacturing and all the different use cases for LLMs, then buying NVIDIA in 2020, even though, as Jenny was saying on that CNBC clip, it was overvalued versus Intel, it was one of the best deals of a lifetime. Buying it in 2020, 2021. And the stock's up 10x since then. So I think the similar thing happens right here when we're thinking about Palantir. Again, I'm not saying Palantir is NVIDIA, but I'm saying it is very important to have an imagination on what the ontology can be used for over the long term and what innovations can be made on top of that ontology, and what that means for entire industries that are grasping a new era of digital transformation in relationship to AI and large language models. And I think right now the street's having a hell of an imagination, giving Palantir a $100 billion market cap, that's for sure. And, in the short term, anything could pull back. But I do think that's important. The numbers don't give you an edge. The numbers can never give you an edge. All the numbers can do is help you feel more confident. So going into Robinhood's earnings, I am very confident because I know the numbers. But that doesn't mean I have an edge over anybody, because if I know the numbers, then that means Wall Street probably understands the numbers, and maybe Robinhood surprises on the numbers. But at the end of the day, the numbers are the numbers. I have to believe that the rate of innovation in Robinhood is so monumental that they can announce a presidential betting market 7 days before the election. That's something the numbers will never tell you. The numbers will never tell you that 7 days before the election, Robinhood's like, hey, we're going to get into the betting markets. Boom. The only thing that can get you there is having an imagination of what Robinhood can become, what Palantir can become, what NVIDIA can become, what's another innovative market right now? What Tesla can become, even though I know Tesla's up there in valuation, but what can it truly become over the next decade? And that's what I think delivers the alpha. And Tesla investors know this better than everybody in 2018 when they were betting on Tesla, right? They're up 20x from then because they had a feeling that Tesla truly would transform the world when it comes to EVs, and they were right about that. So I think it's really, 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 really about creativity when it comes to this game. Now, the flip side of that, creativity can also get you burned a lot of times, right? You might think, oh, I have an imagination that this drug company is going to solve cancer, and then that doesn't happen. So it goes both ways. But the point is, you're not going to win every horse. But when your horse is an NVIDIA or a Palantir that have already done so well, and you feel that Jensen and Karp are not messing around, Vlad's not messing around, Elon's not messing around, then it's worth giving a little bit more imagination to those companies as well. Matthias says, to be fair, I traded NVIDIA based on the numbers. The EPS was growing faster than the price in 2022 and 2023. People were ignoring the numbers edge. That is also true. That's a hell of a point for NVIDIA. That is very fair. The numbers alone on NVIDIA were exploding in 2023. I ignored that a lot. I a lot of times I didn't realize how significant their growth was. And I think a lot of times people thought their growth was topping out in like second quarter 2023, third quarter 2023, and they just kept going with the growth. It actually topped out 2 quarters ago at 282% growth. And I don't know if we're going to get back to 300% growth, but like it took a year for those numbers to top out in terms of top line revenue. So it just goes to show sometimes the numbers give you an edge when in terms of the actual growth, but the numbers are usually backed by having some type of imagination on where the stock can ultimately go. Let's listen to Dan Ives. He is here on CNBC. Let's get his take on what's going on with Apple.
Steve, thank you. That's actually where we're headed next as well, because our next guest calls this the beginning of a true super cycle for Apple, projects the company will be the first to hit $4 trillion in market cap in 2025. It comes ahead of earnings from Apple, as you just heard from Steve. That'll be Friday. 5 of the Magnificent 7 names, by the way, are reporting results this week. Dan Ives, Wedbush Securities Managing Director, joins us now, maintains and outperform his price target right now, 300. And no surprise, perhaps, to our viewers, Dan, you're enthusiastic about what you believe will be the beginning of a super cycle as a result of many of the things that Steve was just talking about Apple going to be introducing. But I do wonder, were you at all concerned by Verizon, sort of their comments about lackluster demand thus far, or at least upgrades, AT&T and T-Mobile, sort of all the same? Or is it really just everybody waiting for these new features?
Yeah, I mean, the reason I'm not concerned, and in all of our checks in Asia that we've talked about here, September, I think the September quarter is going to be better than expected in terms of for Apple from an iPhone perspective. No one was expecting the really inflection point quarter where I think starts to happen in December and into March. And everything we've seen from Asia, I mean, I see some others that have said the opposite. I believe this is tracking that there will be over 240 million units for the year. That'll be Apple's biggest iPhone unit year ever. So I think when it comes to AI, it's iterative, but especially with 18.2 and what we see in the holiday season, I think this is one street numbers still have to move up another 4 or 5%. It is the beginning of a super cycle, which is why I believe going to early next year, $4 trillion market cap, they will be the first to hit it.
I feel like you've used super cycle before. And when have you most recently used it to describe Apple and a new phone?
Sure. So I think when it comes to super cycle, if you look at maybe 2 years ago, that ended up just being what I call a strong product cycle instead of a super cycle. I think part of when you have to look at Apple, I view it as really the install base. I mean, if I go back 2 years ago, 180 million called given iPhones were an upgrade opportunity. This time it's 300 million. So even if we're 50% right, this is a stock that I think goes much higher because services, when you look at AI, it's not just about, Steve talks about 18.1, 18.2. This is now going to be the hundreds of apps built on Apple Intelligence, which is going to give an incremental 10, 15, 20 billion of services revenue. That is the key to this renaissance of growth from Cupertino.
But Dan, you need an iPhone 15 or an iPhone 16 to take advantage of all those Apple Intelligence powered apps. And it feels like consumers were sold something at WWDC and through subsequent advertisements that they're just not going to be getting still for some time. What does it mean for the current quarter if we get some of these features today that are underwhelming and doesn't encourage people to upgrade?
Yeah, and I think to that point, it's really 18.2, which we'll get before holidays, that I think gives a lot of the promise that we saw at WWDC, but then ultimately it's about the March quarter. And what I love about this cycle, normally it's September, December, then all of a sudden you start to ultimately gear up for iPhone 17. Here, it's going to be a lot different. You're going to have strength in December, March, and June. And I think the reason many have missed, we'll call it the $1.5 trillion of market cap move in Apple, is because they're so focused, sort of not seeing forest through trees. It comes down to this is a company transforming in front of us. And the consumer AI revolution will go through the doors of Cupertino.
You think they're disappointed in Vision Pro so far?
I think Vision Pro initially was much more than they ever expected. And I think for Vision Pro ultimately is about what Vision Pro looks like in 2 years, when it's essentially sunglasses at half the price. This is really more about developers right now from a Vision Pro perspective, but this is all the start, Carl. This is all the start of the new era for Apple. And that's why I think many investors are really underestimating the growth and where this is all headed.
If you're right, Dan, and this does set off the revolution in consumer usage of generative AI, what else is it going to mean? Where else are you looking in terms of the impact of that beyond Apple?
Yeah, well, I think as we've talked about the AI revolution, which is still called first, second inning, it's not just on the enterprise with NVIDIA and Microsoft and the hyperscalers, all the strength we'll see this week. I think when you look on the consumer side, it's really now what's going to drive. I believe that's going to be significant for Meta. I think it's going to be significant for Google. To me, I think the biggest miscalculation right now is that AI is not going to have an impact for Google. And I even think for Meta, I don't think a lot of that is really built in to where we all see this heading over the next few years.
To that point, a lot of buzz on the Meta glasses, now sort of being coined the AI glasses, and you get that free assistant with it. So when you talk about that.
And for them, they've actually shown success in hardware for the first time. But who will win that race is Cook and Cupertino, in my opinion.
All right, Dan, thank you.
Thank you.
Dan Ives.
Coming up after the break, Boeing.
Look, at the end of the day, Dan is kind of making the case that it's not about the valuation. It's not about the iPhone growth. It's about the install base. And he has a hell of an argument that if the consumer is going to access AI, it's going to happen through Apple. I think he's correct on this. The question is going to be, does the street give Apple the premium, even if they don't see the resemblance of that consumer AI adoption happening in the short term? And so far, they've already given them the premium at $235. You would imagine, that just gaps up to $250 if the whole market kind of has a run towards the end of the year and they anticipate that consumer AI adoption. But look, he's talking about adding $1.5 trillion market cap. That's probably going to happen through hundreds of millions of people using LLMs on a daily basis integrated into their iPhone. I think that vision is a very easy vision to understand. I don't think that vision is wrong. I don't think that vision is misconstrued. Ironically, I think the Vision Pro had no vision, whereas the AI strategy has a lot of vision. So I think he's right on this. I just think it's going to take some time because, again, Apple AI is just not rolled out yet, which is okay. But if you're owning Apple, there are opportunities that I like that are better, but I don't think it's, oh my God, I gotta get out of Apple. It's going down 50%. I think it's just, hey, AI is the future and eventually consumers will adapt it through Apple. Because if they don't do it through Apple, who are they going to do it through, right? If they don't do it through Apple, who are they going to do it through? And it's not going to be Microsoft. It's not going to be Google. We've seen Google's really not getting as much adoption as, they've wanted to get. It's going to be through something that knows your every single detail about you, which is your iPhone. Now, look, Android can probably do it to an extent as well, but a lot of people use iPhones and a lot of people will interact through AI with iPhones. And so I would imagine Apple ultimately wins that game eventually over time. However, it's trading at a decent multiple. And if you're taking profits on Apple, I also don't think is the worst thing in the world. I am curious who the hell is buying Apple. Again, we know the answer. It's passive index flows, but I don't see a lot of retail investors that are like, oh my God, I got to get into Apple, right? I don't see that sentiment anywhere. I guess the institutions are buying it because they have to buy it. So then it just comes down to it's being propped up, which is okay. That's the benefit of being Apple. When you're that important of a company, you get that. But it might not be the biggest opportunity for a lot of other people. Okay, let's end it off on one question I see in the chat, and then we'll be done with the stream. I am doing a podcast today with our boy Gali from Hyperchange. It won't be live. He'll upload it on his channel probably this week, but it'll be on Airbnb. So he's going to be pitching me Airbnb, and we'll do a podcast. And so that'll be live on his channel. I'll let you guys know when that's out. And that should be a fun one. So I'll be doing that in about an hour. But here's a good question from Chris CRM. Carrying a difficult tension. I love Tesla, and I think it will 2 to 3x. And I love the work Elon does and the history he will create. But I don't like that he's moved into politics. How to assess the risk. So let's do a poll on this. And then I want to get what people are thinking in the chat. I have some thoughts on this. The question is, by the way, the Tesla 270 poll, we had 57% say buy, 43% say sell out of 1320 votes. The broader question here is, do we think there is an actual risk to Tesla because of Elon's politics? And when I mean risk, I mean a real risk, not a 5%, 10% downside risk, but think of like company changing, thesis breaker risk on Tesla, because 5 to 10% down can't be a risk because it could go down 5 to 10% on anything. So it has to be something that legitimately stops the company from progressing or takes the stock down 50%, like something that really hurts Tesla because of Elon's involvement in politics. Do we think there at all is that risk to the company? That is my question. Now, look, here's my take on this. Sure, there's a risk. There is somewhat of a risk. However, Tesla stock was at 130 this year. Now Tesla's 270. Elon was literally at Madison Square Garden last night campaigning for Trump. Elon, God knows how many fundraisers he's done in Pennsylvania advocating for Trump. Every other tweet is about how we need to vote for Trump. I mean, when you talk about using your influence to get people to think in a certain way, Elon is going all out for Trump. Stock's at 270 from 130. I mean, if there's a risk, I don't see where the risk is because the stock is up. And the stock went up a lot after earnings, 24% to be exact, because they grew their operating margins. For all the people that care about his politics, which yes, is a quote unquote concern, I've never felt it's a concern because when Tesla was at 130, it's not because Elon was being political. It's because Reuters put out an article that said they're not coming out with the Model 2 or the next gen vehicle. And every investor was like, well, if they're not coming out with a $25,000 car, why should we even think of, there's going to be no growth. And that's why they sold it off. It wasn't because of Trump or his political leanings. So to me, this is very simple. I think if you believe Tesla will solve FSD and robotics and grow deliveries with the next gen vehicle, stock will go higher as interest rates come down. I don't think it really matters who's in office. Now, look, Harris being in office means it's just going to be a little bit more unfriendly to Elon, and maybe that stops some of their deals. I don't think that takes down Tesla as a company. And Trump being in office, we think it'll be good for Tesla. I know Elon thinks it'll be good for Tesla, but we don't really know if it'll be good for Tesla. So there's still an unknown there. Regardless, I don't think Elon being super political is a risk to the stock price. I think Tesla not executing against their goals, which they haven't been able to do for the past 2 years, not because of them, but because of interest rates, in my opinion, more so than anything, is what'll take the stock down. Not necessarily what'll take the stock up. So those are my thoughts on it. Those are my thoughts. I think if you're buying Tesla and Elon's going to be political, you're buying it for actual innovation. And if Elon's political, then Elon's political. I don't think that necessarily. I mean, look, is Karp's politics a risk to Palantir? Karp has been as political as you can imagine, and like about Israel, about he hates Trump. He's the opposite of Elon, right? Like, I see a Palantir stock that's up 150% year to date. No one gives a fuck. So I just think politics are so idiosyncratic, and in the heat of the moment, we care about it because we have an election and a lot of people are torn on the issues. But at the end of the day, the stock market is much more resilient than the political, ideological, dogmatic assumptions of certain CEOs. BSoft, thank you for the $5 super chat. As a Tesla bull, Trump win risks would be if he takes some sort of Trump cabinet position and has to relieve some of his Tesla duties ownership, I think. So this is a good point. If Elon is ahead of the government cost-cutting commission, whatever Trump comes up with the name for it as, could that take away time from Tesla? Yes. However, Elon's running 6 companies right now. So it's kind of like, dude, he's running Neuralink, Twitter, SpaceX. It's like you could make the same argument for all of these other companies that he's running, taking away time from Tesla, and somehow Tesla keeps executing. So I don't know. I think Elon getting that cabinet position, does it take away time from Tesla? Sure. Is that a risk to Tesla? Everyone's been saying, his other endeavors have been risks for years, and, they haven't really been risks so far. Now, could that still be a risk in the future? Yes. I'm not saying there's no risk at all, but so far, Elon has really proved everyone wrong when it came to his commitment and his time and his ability to maneuver when it comes to this stuff. Matt says, I honestly think it is bullish, as generally the conservatives are more likely to be an ICE vehicle owner, and Elon support from the right may alleviate their distaste for EVs, which Tesla holds a large market share. That's the other thing. I think a lot of people have been talking about this, and I kind of realized this over the weekend. I was reading a couple articles, which is that, dude, a lot of people on the right, they love buying internal combustion engine cars. This is why Trump is super, ICE vehicles, anti-EV. But now they're getting introduced to Elon Musk, and they might be thinking of an EV just based off Elon's support for Trump. And if they love Trump, then they're probably going to show some of that love to Elon. And then boom, you might have a lot of right-wing people in this country start buying EVs, which ends up being bullish for the company, even if liberal Democrats in New York and California don't buy Teslas, which, by the way, all of them buy Teslas. So it's just it's one of those things where it could be a tailwind versus a headwind that a lot of people think. Amit, let's be honest. You are mind clouded due to being a bit of an Elon fanboy. Elon is just a billionaire. It's funny. This is the first time I've been called an Elon fanboy. I don't think I'm an Elon fanboy. I don't own a substantial position in Tesla. I feel like that's a little bit of a qualifying prerequisite to become an Elon fanboy. But I am a fan of Elon's innovation and his entrepreneurship. And as someone who has big dreams, you want to see people who have big dreams succeed. Seeing a Starship land in chopsticks, that's I don't know how anyone can't be a fan of that. Now, having said that, I think I've been pretty damn objective about Tesla for the past couple of years. I mean, we have been pretty objective, and I've had plenty of people on the channel that have also been objective about their viewpoints on Tesla. And for 2023, for the majority of that, they were right about some of those viewpoints. And for the majority of 2024, it's just, now Tesla has re-accelerated growth, which is why it's a good thing. I don't think it's about me being a fanboy. I think it's more so a question of me looking at objectively. Stock was at 130. Elon goes all in on Trump. Stock's at 270. Where is the political risk there? Palantir, stock's at 17. Karp goes all in on Israel is right, and they can never be wrong, which is essentially the sentiment he gave off, even if he doesn't literally believe that. Stock's at 45. I mean, it's just when I'm looking at the broader landscape, I'm looking at companies that are a stock market that doesn't care about companies that are politically active as long as they put up the results. I'm a Karp fanboy instead of an Elon fanboy. Correct. I mean, if you said Karp fanboy, I've got no pushback there. But I don't think I'm an Elon fan. I mean, I'm a fan of Elon, but a fanboy of Elon is different. And trust me, the people on Twitter that are obsessed with Elon, I know those people very well. And they're the ones that say Elon can do no wrong. I've criticized Elon plenty of times. Plenty. I mean, that time when he tweeted that picture that was not the right picture to tweet at the time. You guys know the one I'm talking about in September. He had a lot of issues with anti-Semitism. So like, there's just stuff like I was able to critique him. You had other fanboys being like, well, it's freedom of speech. It's like, no, dude, like that's just, you don't want your CEO tweeting that stuff. Like that's, but outside of that, I think Elon has done a phenomenal job running the company. And as a result of that, I think the stock will continue to reflect what Elon does. So those are my perspectives on what we got on Elon. So 52% of you say there is a risk to Tesla because of Elon's politics. 48% of you say no. So about 50-50 on the polling. Look, my answer is yes, there is a risk, but I think the risk is insignificant if the company executes. If the company executes, I don't think the market's going to care that much about the political risk. All right, that's it. That's it for me today. That's the end of the show. Let's end it out with some prices. Let's see what we got going on. Apple at 233, Palantir falling 44.85. So Palantir was around 45 for about an hour right here, teetering on it. Now it's going down a little bit. We'll see what it looks like on the market close later today at 345. No big earnings today. I think we have Waste Management after the bell, so nothing too crazy today. But tomorrow we're going to have a ton more earnings. Rivian at 1082, Tesla at 271, S&P 500 at 581, Alibaba at 100, IWM at 222, small caps up 1.6%. That's nice. United Airlines up 3.6%, Bitcoin ETF 6.2% for BitX 2X leverage on Bitcoin. Where is Hood? Hood is 2785, up about 2.92% on the day. Is Google still running? Google is up about 0.2%. So Google gave back all of its gains. And then you got Palantir here at 44.90 on the day. All right, that's it for me. Let's do word of the day, and then we'll be back at 3:45 p.m. to end out to the markets today. And then tomorrow, folks, tomorrow is going to be a very, very, very important day. You got SoFi in the morning, PayPal in the morning. You got a ton of stuff after the close. Tomorrow, Wednesday, and Thursday, I mean, it's going to be madness when it comes to earnings. So this week is going to be a big, big, big week for the broader markets. Word of the day is disabuse.
Disabuse.
To free a person from deception or error. I had to disabuse my friend of the idea that traveling alone is always dangerous, sharing my own positive experiences. The coach disabused the team of the notion that success comes without hard work and dedication. I think in that Josh Brown clip, he definitely disabused Jenny Harrington from understanding what it means to be a technology investor and how obviously you need a little bit of creativity to be able to invest in tech. And hopefully SoFi disabuses the shorts tomorrow and gets them to finally cover, and we can get a nice little momentum-based rally going on for SoFi. All right, that's it. Thank you, everybody. Appreciate it. Robinhood earnings will be on October 30th after the bell, so I'll be live at 3:30 p.m. I'll probably have some guests with me on the show, and we'll cover Robinhood 3:30 on October 30th. We got SoFi tomorrow. We have Alphabet tomorrow, and then we have Meta and Microsoft, I believe, on Wednesday as well. So big, big, big week for earnings. All right, everybody. Thank you. I'll see you guys at 3:45 p.m. on the market close. Bye, everyone.